Morning all. How are we doing? Happy New Year and all that. Can anybody remember how to do this trading lark? I've completely forgotten what's going on. 1 second, I need to get to my website. 1 sec. How is everybody? Morning, Eric. Morning, Ladder. New year, new picture. Yeah. So I've got 2 sessions a day now. Going to do morning session and the New York session as well. Morning, Kenny. Morning, Seymour. Morning, Diamond. So slightly different format this year. Getting a bit organised. So a few things to go through this morning, but I'm going to be running the new opening range breakout strategy every day. It's running on multiple prop firm accounts at the moment. I've got it running on this one. I've got it running on an EA account. I've got it running on 2 EA accounts actually. And I've also got it, I've got it running on three prop firms basically. I'm not convinced it's going to fire this morning though, because I'm running version 2 and I've made some changes to version 2. And I've got a feeling what I've done might not trigger trades this morning, but we will see. So basically version 2 is in live testing at the moment on these 3 accounts. Basically just to make sure it works as expected. So we will see this morning, but I'm not sure this morning, to be honest. We'll see what happens. I've also got a new 100k account with my Forex funds, which I'm going to be doing a position trading hybrid strategy on, which basically is basically position trading exactly the same as normal. But what I'm going to be doing is using a 2 ADR stop on the positions. So it's normal position trading, but there is a stop risk involved in it. So it's slightly different to the normal position trading strategy, but using the same principles, getting into multiple positions, not using tight stops, and trading in line with fundamentals. So morning, Neo. Happy New Year. Markets are moving today on the lower time frames. Yeah, big moves. So today basically is really about watching a lot of what's going to happen this morning, because obviously this is the first proper real trading day back. Surprising amount of volatility over the Christmas period, a lot more than I was expecting. Next year I might not take Christmas off because it was actually a lot better than I was expecting. A lot more stable volatility. Volume, it's pretty normal trading conditions, to be honest, which is not normal, but it was. So we'll see what happens. We've got 6 minutes to the open. So I'll do a quick rundown of the news to start with. And then we'll have a look at, obviously, the opening ranges on the DAX. So I was trading the opening range breakout on the DAX. If it works, it might not trigger this morning, but either way, even if it doesn't trigger, that's fine. I know what I've got to do to sort it out, but it should draw in anyway, the opening ranges, so at least we can see what's going on with those. So news. So this week, as usual, we'll start with news recap and obviously have a look. I haven't paid much attention to fundamentals at all over Christmas, and to be honest, I don't really care, because it's more about what's going to be happening moving forward over the next sort of week or so anyway. So so today obviously is Tuesday. We've got bank holiday in Japan. That would probably explain why we've had a lot of high volatility this morning, because the Asian session obviously hasn't been there, so the any volume put in hasn't had Asia to combat it. So we do quite often get a lot of big volatility when Asia's shut. But so yeah, close there. Aussie and New Zealand obviously be open, but no yen. We've got OPEC this all day today. So if you're trading oil, watch out, because there's lots of OPEC news potentially leaking today. Apart from that, there's no other news. We've got the CPI for the Swissy tomorrow. We've got PMIs for the US dollar. Let's turn my volume down a bit. PMIs tomorrow for the US dollar, as well as JOLTS, and then we've got FOMC. So kicking off the week with FOMC, which is obviously going to be volatile as hell. So it'd be interesting to see what the Fed says about the new year. Hopefully it'll be all optimistic. Then we got non-farm on Thursday and unemployment figures, and then obviously non-farm payroll on Friday. We've also got CPI for the euro, and we've got CAD unemployment as well as obviously the US dollar unemployment. So busy week basically to kick off. Obviously FOMC weeks are always very, very, very busy. We've lost a day's trading as well, so there's going to be an awful lot of volume going through the market today. So it's going to be a busy one. I wouldn't be surprised to see the indices go off this morning and this afternoon very, very, very quickly. So that's what's coming up this week. As I say, I haven't been paying a lot of attention to what's been going on with fundamentals. I have been keeping an eye on the news, but to be honest, it's all interest rate driven, which brings me on to the new area for fundamentals on the website, which I'm going to cover this morning as well. So I'm just going to wait for the open, and then we'll cover what's going on here. But just to give you a quick rundown, there's now a new fundamentals section on the website. Any of you that were here before Christmas know that I was looking to introduce more fundamentals into the position trading to try and avoid some of these squeezes. I got caught on two very big squeezes in November, December, which hurt. So I just wanted to basically have a more fundamental bias so that I can identify these better. And I was looking for ways to help with that. Obviously, there's companies out there that do this sort of thing, but they charge you sort of thousands of pounds. So I put my own together, which is all free on here. Basically, it gives you complete fundamental bias. We've got 2 minutes to the open, so I'll quickly run over what we've got. So on the fundamental section, we've got the bias scorecard, which is the first area. It's a bit slow at the moment, the website. It's loading a lot of data in, and this data is all live as well. It's all live driven, so it'll update on a daily basis automatically. So we've got bias scorecard here. There's two versions of it. There's a simplified and the main scorecard. Simplified scorecard basically rates each FX pair based on the interest rates, inflation, GDP, and unemployment, COT positioning, and retail sentiment. So it gives you basically a score out of 14. Sorry, no, it doesn't. It gives you a score out of 6, 7, 8, 9, 10 on this simplified version. So basically, you can obviously go, I just want to see anything that's long or short. God, it's really slow this morning. I just want to see anything that's a good buy or sell at the moment. Yeah, so it gives you a score out of 10, basically. So Aussie New Zealand is a massive sell. We've got buy on euro, pound, etc. The main scorecard is a little bit more complex. This is the one which I'll probably use most of the time because it also takes into account not just the interest rates, inflation, GDP, and unemployment, which are the main drivers for economics and Forex movement, but it also takes into account the change, which is important as far as I'm concerned, because if your interest rates are going up and the last change was a negative change, that isn't a positive, that's a negative. So this gives you a score out of 14. So it also takes into account, I haven't got my pen, the changes as well, which are important. So we've got this extra column here. Well, I'm not able to draw for some reason. Why is that drawing over there? There we go. Yeah, so it takes into account interest rate change, inflation change, GDP change, and unemployment change as well. It gives also an additional score for that. So there's that one there. Market's just opening. We've got key fundamentals, which is basically just an overview of this basically data that I just said about. This is what drives the market, obviously, interest rates, inflation, GDP, and unemployment, as well as COT positioning. So this just gives you an overview for each individual currency. So you can just basically come here and say, right, what's the Australian interest rates at the moment? They're 3.1. What happened? It went up by 0.25% last time. Inflation's running at 7.3%. It went up by 1.2%. GDP is currently sitting at 0.6 and it went down by 0.3. So it just gives you an overview of all the main fundamentals which everybody pays attention to, basically. The differentials, you don't need to worry about this too much, but the differentials is what drives the market and gives you the bias. So, for example, Aussie dollar CAD, the differentials between the Australian interest rates and the Canadian interest rates is negative 1.15%, which basically means that the Australian dollar is lagging behind the Canadian dollar on interest rates, therefore it's a sell. The interest rate differential change was down, therefore it's a sell. Inflation, so basically this is where the scorecard picks its scoring from. This is how the banks and institutions do it, same way. But they have a lot more in their scorecard. So this is a simplified version of what the institutions do. And it gives you a COT bias. So ignore these, you don't need to know what they are. But COT long and COT short basically is whether or not we've got positioning onside or offside for fundamentals, for the institutions. So it gives you basically the differentials. So just give you an example, Aussie dollar CAD is a minus 1.15 on interest rates. So if you go back to the key fundamentals, Aussie dollar is 3.1, CAD is 4.25. So the differential between those is 4.25 minus 3.1, which is 1.15 when you get there. A bit slow, as I say. There you go. So there's a differential. Morning, Sega. We've got COT positioning. Got 3 minutes until the first opening range is in. It's a fairly big move this morning. COT positioning, fairly obvious. This is the open interest of non-commercials on commitment of traders on the futures market. So this basically tells you what the big boys are doing. So the big boys are short Aussie, they're short CAD, they're short Swiss, they're long Euro, middling pound, a little bit negative pound. They're long New Zealand, they are short yen, and they are long US dollar. So this basically just tells you what the big boys are doing. Basically, banks and institutions are at the moment short on the Australian dollar. So we want to be on board with them. Yeah. So this gives us our positioning from the commitment traders. Retail sentiment. This is an amalgamation of all the large brokers that publish their sentiment. So people like IG, Boocamp, lots and lots of big brokers actually publish what their open positions are for retail. Retail get it wrong 95% of the time. We know that. We get it wrong all the time. So it makes sense. We want to be on the opposite side of retail. It's pretty standard stuff. So the entire market at the moment, retail, is short Australian dollar CAD. So what do we want to do? We want to buy it because they're wrong. 95% of the time they get their trades wrong. If 90% of them think it's short, we want to go long. Yeah. And the intraday sentiment is a combination of the COT positioning and retail. So retail at the moment are short Euro US dollar. You can see that the institutions are long the US dollar and long Euro. So that will give us a bias basically. And this is a score out of 6. So +6 to -6. So Aussie dollar, New Zealand dollar at the moment, the entire institutional marketplace is short. Retail, we're getting a -1 on it as well, which means that if you look at the retail for Aussie, New Zealand, you'll find that most of them are long. So we want to be going short. So institutions are short and retail are long. So we want to be going short because we want to be on board with these guys. We want to be trading against these guys. So anything that's like that, like a New Zealand dollar CAD, is a +6. So you got all the institutions on your side because they're long New Zealand and they're short CAD. And you've got sentiment on your side with that because I'd imagine New Zealand CAD, you'll find there will be a big bias on that one. Where are we? There you go. So 94% of retail is short New Zealand CAD. Highly likely that's going up today. So this just gives you an intraday sentiment, right? So there's an overview of that. We'll be covering that a lot more because I'm going to use that every day. So, but it's all up there. It's all updated live. Okay, first opening range is in. Oh yeah, it's triggered. Excellent. So this 5-minute opening range is in. I'm running 3 different strategies with the opening range breakout EA. I'm not going to cover exactly what they are, but there's 3 different versions of the strategy running on the 5, 10, and 15-minute opening ranges. So EA, that's fired as well. That's good. This is 563. So let me just switch over to 554. Actually, no, I won't switch over at the moment. Just quickly check. .563 has fired. Good. 554 has fired. Good. It's fired. Good. Okay, got it. So yeah, so this is basically running the ORB strategy. So big old opening range this morning. So as you can see, the new EA has an awful lot more stuff in it. A lot more. Lot more. much more complex. We've got the opening ranges as well. You can pick size. I'm going to go through this in detail. I'm going to do a video on this. I'm actually going to do a live session on this EA to go through the strategy in detail and to go through all the settings on version 2. So assuming version 2 fires okay today and tomorrow and works as expected, I'll be launching this on Wednesday. It's a big change. So you can see the settings on this there's a lot more. But the main difference between this version of the opening range breakout EA and the previous one is this will take multiple entries. So if you get, for example, that happening today, getting stopped out, and then it goes flying, right? It will take an additional position for you and get you back in again. So the current opening range breakout EA places your orders, it takes the opening range. If the opening range fails like that, that's it. You're done for the day. It's finished. The new version, it will replace these orders for you, because if we're going to get a little bit of a whipsaw at the open, and then we're going to go into the biggest trend you've ever seen in your life, we want to be on board. So this will get you in on those. So the settings in the version 2, as you can see, where you'll take the opening range breakouts and then you'll have what I call continuous mode, which means basically it will continue to take those trades. They're all turned off at the moment. Forget this is just this version of the EA is just running on here to draw the lines. This isn't actually taking the trades. The VPS is taking the trades. So you can see on this one, it's taking all 3 opening ranges, which is the 5, the 10, and the 15 minute. And it's going to continuously trade those until it either hits target or hits max loss, which is the other key thing we've got in here. So it's got a max daily loss and a target, profit target. So what it will do is it will keep trading all day on this instrument, and it will keep working these ranges for us until it's hit target. And the whole purpose of this is to hit prop target. So you can see my prop. This is a 50k account. My target is 54k. Ignore that figure because I've been mucking about with this account, so it's a couple of grand down. But that's because I had the EA set up on it and I was playing with it. But yeah, so basically it tells you how far it's got to go to target, and it will manage the whole prop evaluation for you and do it all for you. Basically, that's the whole purpose of it. But it's got a closeout level. So my max loss on this account is 2,500 a day. So if I get to 1250, I want to stop trading because it's not going well, is it? If we're going to get a choppy session like that, I want to stop. I don't want to carry on in a choppy session. If it does that all day long, I could hemorrhage tons. So it's designed to manage your risk a lot better as well. But equally, it's also designed to let those winners go. Bring in those 3, 4, 5, 10% days, which is done in backtesting. And again, I've been backtesting it thoroughly. So you can see the drawdowns on it. This one's done 1,500 tests, 1,462 passed with profit. And this is one of the set files which is running. I've got 3 sets of files running with different opening ranges, because you can have different opening range stop positions now. And this one is running just a standard 5, 10, 15 DAX opening range. And this one is just running the 5-minute opening range break. So it won't trade the 10 and the 15 or any other times. So running lots of those tests again, but I'm only focusing on the DAX. And the reason being, I don't need to trade the NASDAQ because this trade now all day. So once the opening range is in, one or two things is going to happen. When your opening range is formed, it's either going to go and we're going to hit target. It's not going to go and it's going to chop me about. And then it's going to go and I'm going to hit target. Or it's going to chop me about so much that I'm going to stop trading because the session's dead. And if that's the case, I can't trade anyway because I'm on a prop firm and I can't trade the afternoon session. So I've come to the conclusion that I might as well just trade the DAX. Don't need the US indices. But obviously you can trade whichever you want. But more on that later as well. So there's a lot of stuff going on at the moment. We'll just catch up with the comments. Kenny, I think Trader Nick has a more detailed version. He sells for $1,000. Yeah, so basically that was one of the companies I was looking at. So I wanted to get my own. I've been talking about scorecarding, haven't I? Anybody that's been in here for a year or two in the live room, I've been using fundamental bias, and I have always used fundamental bias for a long, long time. I've never used a scorecarding system. I've got friends that worked in banks and institutions, and they all use scorecarding systems. All the banks and institutions do. Um, I didn't even know his name, wasn't it? But there's a company called A1 Trading. They do something like this, but it's much more detailed. But you don't need all the extra stuff, I don't think, personally. I mean, they look at trend and they look at monthly sentiment and all sorts of things. To be honest, I don't care what happened this time last year. If last January was a bull month, what the hell's that got to do with this January? We're in a completely different situation. The interest rates this January are completely different to last January. So why on earth would you take sentiment from last year into account? It's got nothing to do with it. And trend, current trend. Who cares about current trend? Interest rates. If those interest rates change, the current trend has got nothing. You shouldn't include trend in your bias, as far as I'm concerned. What does trend do? Stops at some point. Look at the Aussie New Zealand last year, November, December. We were trending like a nutter all year. What happened in December? The thing collapsed, undid the entire move in a month. So if you're paying attention to what's going on with the Aussie New Zealand sentiment, set trend, when that interest rate changes, you're dead. So yeah, I'm only interested in the main institutional drivers, which is this lot. But yeah, I mean, people sell this for, a lot of money. But at the end of the day, all it is data. This is nothing. I'm not doing anything clever here. All I've done is I'm going to get this information from the people that publish it, and I've put it into a spreadsheet database on my website. I'm not doing anything clever. I'm just giving you information which you can get freely on the internet everywhere. I'm just putting it in one place because I need to know it. So. But yeah, you can get it elsewhere. There's lots of other places you can get this information, but I just want it on my website, just how I want it laid out, how I want it. Basically, I want to see the cot positioning the way I want to see the cot positioning. I want to see retail sentiment the way I want to see retail sentiment. I want to use it and score it the way I want it scored, not the way anybody else wants it scored. So that's why I built my own. Big old opening range this morning, so quite a tricky one to trade, but we'll see where it goes from there. Morning, Tammy. Shouldn't the 15-minute pre set already painted a range? Yes, if you're trading it. I'm not trading the 15-minute pre. So what Ladder is referring to there is the 15 minutes before the market opened. If you'd have taken that, you'd have had a lovely, nice profitable run. But I'm not trading that pre-market. I've been doing a lot more testing over the Christmas period, and the 15-minute pre is just as good as any other breakout, but I just don't want to trade all of them. So I've decided to stick with the opening range because I've found there's no real advantage or disadvantage to any. If you want to trade the pre-market, trade the pre-market. It doesn't really make a lot of difference, to be honest. At the end of the day, the strategy works regardless of which times you set. I've done a lot of testing. Somebody else as well, while we're talking about testing, somebody else put me on to Trader Tom. If you're familiar with Trader Tom, Hugard, I forgot his name. He before Christmas apparently published. Well, I saw actually somebody sent it to me. His what he calls the school run strategy, which is basically a variation of the opening range, but he uses the second 15-minute. So let me just get another chart. So this is another one. If with the opening range breakout EA, you can test it because you can trade his strategy as well. But he uses the second 15 minutes. So that's your first 15. We're on this second 15 now. So when this candle closes, basically what he will do is he will draw a range on that candle, and he will take a breakout of that candle. So there's another variation of the strategy you could use there as well. I've done some. Because somebody sent it to me in Telegram. I've done some initial testing on it. And to be honest, I didn't find it anywhere near as profitable. Let me just get the spreadsheet. Not just the smallest. But then again, I don't know if I've got the optimal settings for it. So yeah, I don't know. I tested it. It didn't seem, well, I couldn't make it as profitable as using the 5-minute opening range, but then it doesn't mean that's right or wrong. It's just another breakout strategy at the end of the day. She on Gmail. What? After losing my investment on crypto and lost all hope, friends introduced me to Mrs. Catherine, who helped recover me and saved me the stress. God, the spammers are back already. Didn't take long, did it? Unwanted commercial content or spam. Bye-bye. I love them. Absolute sterling job with this scorecard. Bloody love it. Yeah. Secretly love me too. Oh, I'm married. Tommy's a legend. Yeah. Tommy's a very good trader. Last year he did 100k to 1 million plus. Yeah, he does that every year. But you've got to be big balled to trade the way he trades. Not for everybody. Basically, though, Kenny, he trades a variation of the opening range breakout, from what I understand. He also trades double tops and bottoms, and I mean he's a scalper basically. You know, he's scalping $200, $300 or pounds a point or whatever. So, yeah, you got to be pretty organised to be consistently profitable at that. Which is kind of why I built the EA, because if you want to trade the way that he trades, you can program the opening range breakout EA to take that strategy that he's published and let it do it. I don't know what the stops and take profits are he uses or anything, but it's all configurable. So in theory, you should be able to, with the opening range breakout EA, you should be able to trade pretty much any range breakout strategy. It's just a range breakout EA. It's designed obviously to trade the open. So, you know, so just going long on the DAX. Oh, thinking about it. There we go. Buy. So in long on the DAX. And I'll be in long on that, all accounts. Why is open profit not updating? It's because I'm using a different magic number. That's right. Sorry, this will update. If you look at this on the VPS, you can't see it properly, but because this VPS, I hate this new VPSs with this high resolution display. You can't. It really screws this up. But you can see this is obviously running open profit because this is running on magic numbers, and this version of the EA is running on a different magic number. There, 1, 2, 3. So the EA is actually running on 999 on the VPS. So that's why it's got different. Well, it's not updating here, but all the other data is the same. It's funny. He does risk 30% per trade. 30%? No, he doesn't. Not as far as I'm aware. I don't know, to be honest. I don't really follow him. I'm in his group. I'm in Tom's Telegram channel, but I just don't get time to follow anybody else, as you know. So I'm in here all the time. Is the opening range the first 5 minutes of the hour candle? Yeah. So opening range breakout, I'm going to cover this. So stops. So basically, as you can see, it's just immediately reduced my risk by 50%. Now we've got a candle close. We're off. So it's managing that risk. If it comes back down now and takes me out, I'll get back in again. But just see what the others are doing. Yeah, so these have got different settings on basically. So you can see the stop on this one is in a different place to that one. So it's running a different strategy. Yeah. And the other account, I've got 3 accounts running in this strategy with different settings, and they're all going to do different stuff. This is updating on candle close on this one, isn't it? That's right. Sorry, I'm just talking to myself. I'm just talking from what it should be doing and just making sure it is actually doing what it's doing, which is good. Right, so what we're going to do this morning is going through the fundamentals and obviously having a look at opportunities to get into some FX pairs. I'll be doing a live stream on this new EA. I'm just going to put it in the Telegram group. So I don't know when I'm going to do it, but I will probably do it tomorrow, I think. I just want to make sure this trade's okay today, because I don't want to change the logic of the EA, and I want to make sure this logic is all working, and it seems to be working fine at the moment. I just want to watch it. So yeah, I'll probably do that tomorrow. So it's going to be basically going to go through the entire opening range breakout strategy, how it works, why it works, what the theory is behind it. And then I'm going to go through the settings for the EA and explain the EA in complete detail, how it works, the logic behind it, everything. And then that's the video that is going to accompany the product, basically. So you'll have everything you need to know in that one video. So I thought if I do it live, then people can ask questions. So I'll put that in the Telegram group when I'm going to do that, but I'll probably schedule it in for after tomorrow's London session, before New York. Right, so let's have a look at FX pairs. So I haven't taken anything at the moment, obviously, completely flat. There's a hell of a lot of movement this morning, as you can see on the ADR dashboard. So CAD Swiss, 175 ADR. We got Euro CAD up there at 170, down there at 175 as well. We got US dollar Swiss. Jesus, look at that going. 175. So huge moves today. Obviously being first day back. Have you seen Umar Ashraf? No. So I said that I don't really follow anybody. I trade for a living and I do this in here. So I'm not able to follow anyone else because I'm here all the time, aren't I? Yeah, gap fills is a good strategy. There's thousands of strategies out there. They all work. You just got to be able to implement them. So yeah, ADR's off the charts. So what I want to do today is just watch the morning unfold and see what happens, because I think today we're going to get quite a lot of volatility. How you're going to trade this is going to be quite tricky today, because obviously everything's already gone. And I really want to see where everything decides to settle today, because we've got NFOMC week as well. So all of these potentially are shorts. So looking at the new way to use fundamental bias, if you're going to look at all of these, yeah, at the moment, you can see these are all like off the charts at the moment. US dollar Swiss is flying to the upside. So the question is, do you want to be fading this ADR reversal? So the reason for this fundamental section is to help you decide whether or not you want to take a short there. So if we have a look over here at the US dollar Swiss, let's use a simplified version because it's easy. US dollar Swiss at the moment is a score of 2, which means it's range bound. So you can basically trade that in either direction. And the reason for that is because we've got high cot positioning long on the US dollar and short on the Swiss franc, but retail sentiment today is against us. So as far as interest rates and everything are concerned, it's pretty even. Look, so we've got +1, a -1, +1, a -1. So interest rates, inflation, GDP, and unemployment don't give us any competitive edge. COT gives us an edge long, but retail at the moment gives us an edge short. So therefore, it gives us a score of 2, which means we're range bound. So that's not probably the best thing to be trading today. So if we flick over and have a look at another pair, for example, that's gone nuts, like New Zealand dollar, US dollar, that is also range bound. So probably not the best one to take there either. But because it's range bound, you could, in theory, take a trade in any direction because we're expecting it to go sideways. Just to quickly explain the reasoning behind these sells and buys, just for anybody that doesn't know, obviously when you're trading any instrument, any FX pair, there is a bias long against a bias short, for example, on Aussie and the CAD. So you could be long bias on the Aussie and long bias on the Canadian dollar. If you're long bias on both, it's likely to go range bound. Yeah. If you've got something like the Aussie New Zealand, where you've got a massive short bias on the Aussie and a massive long bias on New Zealand, that gives you a massive negative score, which is a big set. So what we're saying is, with these scores, because the market is short and all the fundamentals are pointing short Australian dollar and long New Zealand dollar, we get a very high score. Does everybody understand that? Just, I don't know, it's obvious to me, but obviously, if you don't know much about fundamentals, it wouldn't make any sense. But the whole purpose of this is to allow you to pick the best pairs to trade. So, for example, at the moment with the euro pound, it's a buy because we've got a +5 figure, because interest rates are saying not so good for euro pound, but inflation for euro pound is good, GDP is good, unemployment is bad, COP positioning is good, retail sentiment is the opposite direction, so we want to be going against them, so that's good as well. So that gives you a buy. So for the moment, euro pound is a buy. So if we see euro pound, which isn't lit up today, tanking, what do we want to do? Buy it. Yeah, so if this thing comes all the way down here today, we get an ADR hit to the downside, we get an RSI extension on the 15, the hourly, the 4 hourly, whatever. If we get that down, that's a good spot for us to start buying. So the idea is we want to be looking at these ADRs, like the CAD Swiss, for example, and having a look at the fundamentals and saying, right, what do we want to do with the CAD Swiss? That's range bound. So let's have a look at just buys and sells. Okay. So if we look at these, Aussie New Zealand and Aussie US dollar. Right, Aussie US dollar. So let's have a look at that one. So we've got an extreme on that to the downside. So what do we want to be doing with Aussie US dollar? Selling it. Oh, well, we've missed it. Okay, so it's already gone. Missed it. What's the next one? Euro pound, that's obviously not moved to the downside yet. Euro New Zealand and Euro US dollar are sells. Euro US dollar, that's extended. It's already gone, missed it. So again, you know, these, if you'd have just taken these biases this morning and put an order in, you'd have been absolutely milking it. Pound New Zealand and pound US, hindsight. Pound New Zealand and pound US, so they're both extended as well. So pound New Zealand is extended to the upside, pound US to the downside. So looking at those two, pound New Zealand is a sell. Right, so that's a good ADR reversal. So pound New Zealand is the first one we found that is actually in the right direction. So fundamentals are saying pound New Zealand, we want to be selling it. Interest rates, negative for the pound, positive for New Zealand. Inflation, same. COP bias is on our side. We've got no retail sentiment today, but never mind. Depends if you want to pay attention to that or not. But COT is on our side for pound New Zealand. So the market is currently positioned short on pound New Zealand, and we've got an ADR hit to the upside. So we want to be looking for short positions. So that's a perfect entry there. So let's have a look at it on the higher time frames. So again, we're trending down ever so slightly at the moment. We've got an ADR hit to the upside. So perfect time to be starting to look at short positions. Hourly, not quite extended. So again, anything you want to look at, this is the way that I'm going to be using this anyway. So for pound New Zealand, I'm looking for short entries. So I'm looking for ADR hits to the upside. Yeah, because I want to be getting in short. I'm looking for RSI extensions to the upside on the hourly and the 4 hourly. Yeah, because I want to be taking shorts. I'm going to be looking at support and resistance, or supply and demand, or whatever you want to call it. So be looking at levels, propulsion gaps. Yeah. So if this thing trades up into there, I want to be shorting it. Yeah. So the fundamentals basically are our long-term overview as to which way do we want to be trading this thing. It doesn't mean we just hit the button and get in. We wait for an ADR extension, an RSI extension, or a support resistance level to be hit. That's where we get in and start shorting. And that's what I'm going to be doing with this prop account, is basically just starting positions as things push to areas that make logical sense to get in. So for example, pound New Zealand. So let's stick pound New Zealand up. Pound New Zealand. I'm going to stick the market reversal alert EA on there. And I'm going to go short. H1M5 support resistance bounce. So I'm taking 0.5% risk on a short with a 2 ADR stop. So basically all this set file is doing on the market reversal alerts EA on M5 I'm going to put this on M5 in a minute. It's going to go and take shorts for me because I only want to be short on pound New Zealand. And it's going to take 0.5% risk, and it's going to use a 2 ADR stop. No TP. I'm going to get out when I fancy it. I'm just going to let the thing get in and start building a position short for me. No other signals at all. No other filters whatsoever. I'm just saying, basically, next time you get an M5 reversal alert, take a short for me, which will be down here. Yeah. So there's first position, pound New Zealand short. Not in it yet, obviously. But it's an ADR hit to the upside. So at the moment, the reversal alert is going to be all the way down there. Nothing much we can do about that. But if it comes back down to there, I'll get in short. If we get up there and we get that sort of price action, we'll get a reversal alert and I'll get in short up there. Yeah. So pound New Zealand, pound US dollar is a sell. Already gone. New Zealand dollar CAD is a buy. New Zealand dollar Swiss is a buy. Right, so New Zealand dollar CAD, that's a good opportunity to get in long. New Zealand dollar Swiss as well. So New Zealand dollar CAD, very nicely extended to the downside. Look at that RSI on 5 minute. 2? Jesus. Let me just check fundamentals on this. There's nothing happened this morning on New Zealand or CAD, is there? Okay, fine. So again, New Zealand dollar CAD longs. So New Zealand dollar CAD, put the opening range breakout. Oh, not the opening range breakout, market reverse. So that's on new magic number. I'm going to take longs on that. So New Zealand dollar CAD, again, M5. I'll get in long on the next reversal on that one. New Zealand dollar Swiss covered. US dollar CAD and US dollar yen are both buys. Already gone, missed it off of ADR. US dollar yen, missed it off of ADR. So they've already gone this morning. So again, those two good opportunities. There was your entry on the market reversal at ADR. That's already done 126 pips today, so missed it. No, I don't trade TradingView, Kenny. Are you new in here, Kenny? I don't know. Don't recognize your name, but go and watch the Boocamp. Everything's explained in there what I do. So that is the way that I'm going to be using the fundamentals, basically. So I'm only really interested, and there's two ways you can use it. Obviously, the buyer scorecard is the simplified or the bigger version. And to be honest, they'll give you pretty much the same signals. So it doesn't really matter which one you use. There'll be slight variations on these. But the main scorecard is one which I'm really going to focus on. But at the moment, they're both giving you the same information. So instead of using, as I have in the past, the 4 hour, obviously, trend, which is what we've always sort of paid attention to. I'm still going to be using that, obviously, and looking for pullbacks into the 24.72 with RSI extensions, the usual stuff. But what I want is the fundamentals on my side. What I'm looking to avoid is what happened with Aussie New Zealand. Yeah. So trading the hell out of this thing long all last year until there. That's where I took a long position, wasn't it? And got absolutely creamed on that move down. So if I'd have been paying attention to fundamentals more seriously, I would never have got into that trade. This was a massive sell back in November when that fundamental shift happened, when that fundamental interest rate change happened. The interest rates shifted and everything shifted against the Aussie and positive on the New Zealand at the same time. COT sentiment was completely short. Again, I stopped paying attention to COT sentiment last year. Now I am again. So this is why this is here is designed to help me with my position trading, keep out of those hideous squeezes that we experience. All this profit's locked in now on all these positions, opening range breakouts. So we're locked in long. Can't lose. They're all free trades at the moment. So yeah, so that's basically the whole reasoning behind this. So from a simplified view, the way to use this on a daily basis is you come in here and you go, whichever one of these you want to use, the simplified or the main. To be honest, it's not a lot of difference, as I say. If you're only looking to get into ideally trendy or what is predicted to be trending instruments, just go buy and sell and concentrate on these. Aussie, New Zealand, monitor it, wait for Aussie, New Zealand to get an ADR hit to the upside, wait for the RSI to get extended on the hourly or on the 15-minute or on the 4-hourly, whatever you want to do to the upside, and then take reversal alerts short. Yeah. Same with the Aussie US. I want to be monitoring that for any ADR hits to the upside. I want to get in short. Euro pound, I want to be looking for buys. New Zealand's CAD, New Zealand Swiss, I'm looking for buys, and the US dollar pairs I'm looking for buys on as well. Everything else at the moment, that is range bound. In theory, you can trade any of this either way. Yeah. And the main focus of this is obviously major market participants on all of these pairs have got no directional bias. There is no advantage either way from cot positioning. Yeah, this one, there's no retail sentiment advantage either way on the Aussie dollar yen. From an interest rate, it can't really, the yen's actually difficult for interest rates, but it's a +1, a -1, a +1, a -1. So you're getting a score of 0. So basically Aussie yen, I would suspect, is going to do either that or something like that or something like that. Yeah, so it could range up, could range down, or it could range sideways. But I'm not expecting it to go mental in either direction. Yeah, because there's no bias, there's no reason. The market participants haven't got a direction on it. Yeah, there's no advantage from a fundamental perspective that says the Aussie should be flying against the yen or anything like that. Yeah, and the same with all of these. So these are all given a range score. So anything from a +3 to a -3 is going to be range. When we get to a +4 or a -4, then we start looking at buy and sell signals. Yeah. So with any of this, right, for example, Euro CAD, let's look at that. It's range bound. Right. So Euro CAD, it's range bound. There's no fundamental advantage in either direction. So we can take this long, can't we? Yeah. You can take it long or you can take it short. So any reason you got an RSI extension on the 5-minute, you got an ADR hit. Euro CAD, it's not lit up at all yet there, but if you get an RSI hit on the 4-hour, this is the hour, this is the 1-hour RSI and the 4-hour RSI 14 extensions. So any of these get lit up basically to the downside, you could take a long. If it gets lit up to the upside, you can take a short because there is no real directional bias on it. It could go either way. So you can pick basically whatever direction you want with these. But for me, I would much rather be trading instruments that I know have got a much bigger chance of moving fast. So if you've got a fundamental bias in one direction or the other, yeah, that is more likely to go parabolic quickly than something that has a very minimal score, i.e. no fundamental driver to take it in any direction. If the big market participants have got no directional bias on something, and these are the guys that move the market, it's not likely to move very fast or hard unless we get something like an interest rate or an inflation change or GDP figures or unemployment that comes out positive or negative. And that's why we're watching this CPI for the Swiss franc tomorrow. So we've got the inflation for the Swiss franc. So these figures here will change. Yeah. Yeah. So this is quarterly, but you know, so you've got to basically pay attention to this And I'm going to use this basically just to get me into position. So Euro CAD is a good looking long opportunity at the moment, potentially. It's an ADR extension to the downside. Whoops. 15-minute, we're nicely extended. Hourly, we are extended. And we're at a potential area of support, which is being rejected. Yeah. So as you can see, Euro CAD, the bias on the Euro CAD is range bound. Yeah. So if we look at it and zoom out, what's it been doing? I know this is the Christmas period, but it's not going anywhere, is it? This is what I mean by a slight range like that or like that. But when we are position trading, it doesn't matter, does it? What we don't want is it to go parabolic in one direction or the other. What we don't care about is if it goes down and does that. Market structure. That is exactly what we thrive on with position trading, isn't it? So what I'm saying at the moment is on Euro CAD, take it in either direction. Because the likelihood is if it does have a strong move in one direction, it's probably going to have a big pullback because there's no fundamentals driving it to go completely parabolic in one direction or the other right now. And obviously this data will change on a daily basis when news is released. Sentiment changes 6 times a day. This changes every Saturday. This changes 6 times a day. Hence the intraday sentiment section. So if you only want to trade on the 5-minute charts, the best things that you can be trading today would be these guys. Yeah. New Zealand CAD is a strong buy. Euro pound is a strong buy. Euro CAD is a strong buy. Euro odd is a strong buy. Aussie New Zealand is a strong sell. I don't know what they've done today, but yeah. So Aussie New Zealand is a strong sell because COT is on your side. Yeah. If we look at Aussie New Zealand from a COT perspective, they are 68% short on the Australian dollar, 64% long on the New Zealand dollar. So the COT sentiment is they are short and long, which is short odd, long New Zealand dollar. So if we want to stay on side with these guys, we want to be short Aussie, long New Zealand. At the moment, retail sentiment is everybody's long. They're usually wrong, aren't they? So we want to be short. And that's why you've got a score of -1 there, because the retail guys are all long. So we want to be short. COT guys are all short. Retail's long, so we want to be short. That gives us -5. So you want to be looking for short opportunities, Aussie, New Zealand. Click over to Aussie, New Zealand. There's a reversal out on the 5-minute chart at previous level of resistance. Perfect entry. Yeah. Does that make sense, how to use the fundamentals? I'm not really going to do a massive video on it because that is pretty much it. But I put the intraday sentiment up there because a lot of people, as you know, and quite rightly so, you want to trade 5-minute charts. So if you're trading intraday, longer term fundamentals, what's happening on the longer time frame charts doesn't make much difference. On 5-minute charts, if the entire market, I say market as in the big players, the banks and institutions are all long on this stuff, it's more likely going to go up at some point. If retail is going the wrong way on it, that is when the big banks and institutions tend to move it. When retail have decided they want to go that way and these guys want to go that way, they wait for retail sentiment to go that way because they know where all their liquidity is. What do they do then? They hunt that liquidity. Yeah. So New Zealand dollar CAD, if that comes down like this, where is all of retail's stops at the moment? Everybody that's shorting this at the moment, where's their liquidity? Yeah. Ultimate bear trap. Yeah. So longing it from an ADR extension down there, because what's going to happen next? They're going to do that. Everybody's going to put their stops there. Then what they're going to do? Push up, take those stops back out. Going to get into that resistance. Then what they're going to do? Pull back. Everyone's going to put their stops there. Then what they're going to do? Push up to there to get those liquidity. Yeah. So we wait for retail to be on the wrong side of the institutions, that's when we pounce. No one in the right mind is going to be looking at that right now going, oh my God, that's an awesome long, are they? They're all short. We can see they're all short. That New Zealand Academy. Yeah. 94% of the market is short on New Zealand dollar CAD at the moment. And the other thing you got to think about as well, if these guys have had a day where the institutions have let them make profit, what they're going to do down here, get out their positions. What do they need to do when they get out? They need to become buyers. What's that going to do to price? Drive it back up again. So whichever way you look at it, that's a good looking long opportunity. RSI massively extended and embedded. Extended down there at support. Which they haven't quite taken yet. So I probably would hold fire on that until they've got that, if they can get it, because there's going to be liquidity sitting there. So that would be my ultimate. So if that gets down to there today, I'd be more than happy to jump on long on that. But you could jump on long now, right now, and wait for them to do that. But you could get in there. But whatever you do, don't put a stop there because they're likely to do that. Make sense? Everyone's very, very quiet. Am I just blowing everybody's brains? Or am I jumping around too much? So New Zealand dollar CAD, so I'm going to get in long on that on the next reversal of that. So I'm just making sure these are all trading as they should be. They are. It makes absolute sense. Thank you, digital. Hope so. Yes, but need more rejection candle. I guess it will reverse later. Yeah. So I mean, basically, obviously, fundamentals are to be used in conjunction. You know, you can't just go, oh, that says -5. I'm going to hit short. You need a reason to get into a trade. So if you're going to look at shorting Aussie, New Zealand. Sorry, one sec. I've done this the wrong way around. Hang on. Well, -4 and -5. You want the bigger numbers, not the smaller numbers. We're just saying, that's wrong. Yes, you want the biggest sells and the biggest buys, basically. So yeah, Aussie, New Zealand, and Aussie, US. You don't want to just jump in on them. You want to wait for them to get somewhere, and this is what This is why we're using them in conjunction with RSI extensions, ADR extensions. Yeah, so we're waiting for these to get to a position which is advantageous for us to take along. When the market's exhausted like this, there's going to be a profit take move, isn't there? That's where we're going to pounce. Or after they've just stolen liquidity. So I don't know what your sort of thoughts are on the way to run the live rooms. Because obviously this morning's a little bit of all over the place. Because first of all, it's the first day back. Secondly, there's pandemonium in the markets at the moment. And thirdly, obviously, just wanted to explain what my sort of thoughts are on what I'm going to be doing. So rather than the way that I used to do it last year was to basically just go through every single instrument and have a look at where we are. I'm happy to do that. But what I would rather do is come over here and go, I'm looking for, sorry, not that one, entries on these pairs. Yeah. So I want fundamentals and major market participants, and ideally retail on the opposite side of everything here. Yeah. So I would rather concentrate from a position trading perspective on just looking for entries short on those things and long on those things, rather than going through every single instrument, because obviously there's nothing wrong with taking trades on any of these. Yeah. So CAD Swiss, for example, could look for opportunities on the CAD Swiss. But look at it. At the moment, it's range bound. I'd rather be short on it because that's the way the current trend is going. And we are a -1. So we're a little bit more negative than positive. But wouldn't you rather be on something that has got massive fundamentals, like huge US dollar strength against huge Aussie dollar weakness? Surely that is a better position to take than something that could just go sideways for 3 weeks and tie up our liquidity in the CAD or the Swiss. And that's the purpose of building this, is to try and find an initial fundamental bias to trade from. So concentrating only on these pairs. And then, as I say, I'm going to be looking to, just as I did this morning, stick the market reversal alerts EA on and just let it get me into positions when we get some decent movement. So Aussie New Zealand shorts. So on that one, hello. So open up Aussie New Zealand, put it on M5 and put the market reverse alerts indicator on. And I will look for H1M5 shorts. So this set file here is H1M5. And I only want to go short. So 0.5% risk, 2 ADR stop. And I need the RSI on the hourly to be extended above 70. And I will get in short on any reversals. Because the bias on this thing is a massive sell. So that's kind of the way I want to trade this. I want to let the market reverse alerts EA just literally get me into positions in line with fundamental bias. But obviously, if we see an ADR hit, then come over here and have a look at the intraday sentiment. If you've got an ADR hit on something and you've got a massive intraday sentiment in the opposite direction, probably a good opportunity to jump in, isn't it? So there's lots of different ways you can use this data. And obviously this is regularly updated. So this changes throughout the day. It doesn't change massively. You'll see this like 90-10 will change to an 84 16, etc., etc. And then it will, 1 o'clock this afternoon, it will change to 87 13 and things like that. You don't find it suddenly jumps completely the opposite direction. You will do if they hit a liquidity level. So as an example, on Aussie CAD, yeah. So, for example, if there was a load of retail, I mean, unlikely there's a load of retail long there. This is over New Year period. But if there was a load of retail long there, yeah, they all get stopped out there. Obviously, what's going to happen is this is going to change because all of their stops will get triggered and all these guys that were short or long or whatever will get stopped out. So that will sometimes have quite a big impact, which is why this is updated 6 times a day, every few hours, intraday, because we need to keep an eye on what's actually happening. And you'll find that this will change on an intraday basis. So if you've got something that is here, for example, you've got something that's a massive long, like New Zealand dollar yen from a institutional point of view, but retail is totally against you at the moment. At some point, if that changes to a +2, i.e. they get stopped out of a load of positions, 4 o'clock this afternoon, you might find that that suddenly becomes a 6. Now we need to start looking for New Zealand dollar yen long. So if we get an ADR hit or an RSI hit, that could be a good scalp. So anything you see here, not really used for position trading. This is all really for intraday stuff. This is more for position trading. Would you mind if I ask how can I access what you'd just showing about the sentiment page? It's on the website under fundamentals. Just sent a link. Is that what you mean? It's all here. The elastic band on cable is going to snap. Look. Yeah. So, you know, pound US dollar, great example. So, you know, everybody now is sitting here thinking, my God, look at this thing collapsing. Do you want to be buying or selling cable at the moment? I don't know. Let's have a look. So pound US dollar, it's a massive sell. Yeah. Why? Because at the moment, interest rate differentials are negative the pound. Yeah. Change, no advantage. Inflation is negative for the pound, US dollar. GDP, the pound is not doing as well as the US dollar from a GDP perspective. Unemployment, no differential. Market participant, actually, there's a -1 differential with unemployment change because unemployment in the UK went up and unemployment in the US went down the last time they were announced, which is negative for the pound US dollar. So it's another reason to sell because it was good news for the US and bad news for the pound. Big market participants are on your side. They are more short on the pound than they are long. And we've got, as we know, longs on the US dollar. There's no retail advantage at the moment. So overall, that's a sell. So do you want to be buying that elastic band that is stretched? Probably not. But when this comes back here, that is where I would be a seller. Right? We've missed the move. We wanted to be short pound US. Fundamentals are all on our side. We want to be short. We missed it this morning. So what do? Wait for a retracement. So if you want to, you could stick a pending order. I'm not going to do it there because this is a live account. But you could stick a pending order somewhere up there, couldn't you? Or you wait for price to get back up here, and then you stick the market reverse alert indicator on the M5 chart, and you say take the next short. But today, obviously, I would be very much taking with a little bit of a pinch of salt. It's first day back after Christmas and New Year. We've got Japan shut, and we've just come out of a bank holiday. What you're seeing here is commercial order execution. So all the banks and institutions have been sitting on large orders from big corporates for a few days, and they need to get the whole lot in the market, and that's what they're doing. They're dumping. So we need to wait for a pullback before we get in short on this. Or if you don't see a pullback and you see a flag form, take a flag break. Up to you. But the question is, and the way to use the fundamentals is to help you answer the question, should I be fading this? No, because the market participants are against you. If this had hit to the upside and taken liquidity, should I be fading it? Yes, because the fundamentals are saying I need to be short. Yeah. So it helps you filter. So any like alerts again, like US dollar Swiss. We just got our RSI high alert from US dollar Swiss. Yeah, on the 1 hour chart. Do we want to be shorting US dollar Swiss? Maybe, maybe not. It's more bullish and it's on the verge. Remember these scores. When you get to a 4, it becomes a buy. A 3 is a range. It's on the verge of going long. So at the moment, we've got retail sentiment against us. Yeah. If that turns into a -1, because they all get stopped out, that will change to a 4. That suddenly becomes a buy. So check back later. is the answer on that one. And again, we're looking to get in long, potentially somewhere around there, maybe there. So you could fade that because it's not particularly strong. The fundamentals are not particularly strong at the moment on US dollar Swiss. They're not weak, they're not strong. We're range bound. Jesus, this thing's going mental today, isn't it? These ADRs coming in now. Aussie CAD, 150. New Zealand yen, 125. 175 Aussie US. Massive US dollar strength this morning. ORB is going nicely. $800. Let's have a look. $1,000 profit on that one. $400 on that. 650 on that. The other thing about this as well, you can't actually see the target, but again, that figure there, you can't see it, is 720, which is my target for this particular pair. So when we get to $720 in profit, you can set the new version of the opening range breakout EA to do one of two things. Either tighten stops. So at the moment we're running on a, I think this one's running on a 30. Where are we? 60. So this is running on a 60 pip stop. So when it gets to 720, what this will do is it will automatically reduce that to 200. Yeah. So we're running a 600 pip trailer. But when we hit $720, it will immediately start to reduce that risk to 200 pip, 20 points trailer basically. So when we're getting close to target, it will start to lock in that profit, because what you don't want is suddenly this auto collapse down to here and you to make $150. Yeah, we want to lock in as much as we can. Yeah, so it will automatically do that. The other thing you can have it do is close out, auto exit. Sorry, it's up here. Close all trades, which this one is actually going to do. So if this gets to 720 in profit, it will just shut the lot and bank it. So you can set that to true or false. If you set it to true, it will just close all trades and take the money. If you set it to false, it will tighten the stops for you and keep trailing, but trail tighter, just to lock that profit in. It's much, much, much more advanced, the way that this handles the account. Might want to watch this actually, just want to see if this does actually shut it out. Be a good test. You watch, it's probably not going to go now, is it? It's going to sit there and hover around 700 and then it's going to collapse. But again, nothing you can do about that, is there? If it does it, it does it. I mean, if it's already dropped moving up, probably wait for a pullback to find the best buy entry. Yeah, exactly. Yeah. Richard was just talking about the yeah, about that. So yeah, want to be waiting for a pullback to sell on whichever. This yen, this is all going nuts today. Look at it, it's mental. 665, come on. Right, see the stops just got dragged up there. So now we're still running at a 60 pip stop. See if we get up to 725. These ADRs are going off. It's constant. Look at it. What a day. Come on. Pushing up to 720. Oh, 705. Come on. You can do it. You can do it. Go on. Go on. A little bit more. If I watch it, it's all going to collapse. If I don't watch this, it'll all fly. You watch. 705. Come on, 720. A little bit more. 722. There you go. Right. So there we go. We're closing out the positions automatically. Shut. 718 profit. Target hit for the day. So this strategy that I'm running on this particular account, on this EA account, the stop for the day. That's it. I'm not doing anything. I've hit target. That's all I wanted to do. 720. I've done it. So that's finished. This will not trade at all today now. This account, 379, 375 target. So that's hit as well. So that one's also stopped trading. This one is still trading because profit target on this is $2,000. So what will happen is this one will just keep trading and keep trailing, basically, and it will just get taken out as and when. So this is designed to catch the real big runners on this particular account, but just let that one run. And then if this afternoon, this now comes back down to here, and then in New York, basically, we do a pullback and bounce, this will get me in again and take that second bite of the cherry this afternoon. So there's no point in me trading the NASDAQ because this is going to do the same thing. The DAX is going to move with the NAS, isn't it? So I don't really see much advantage in actually trading the NAS as well as, because this is now trading all day for me. But anyway. Is this released already? Yeah. It's already available, Kenny. The market reversal alerts EA. Sorry, the opening range breakout EA. Why can't I copy that link address? Fine, I'll go to the page. There you go. So that's the ORB EA. This is version 1. Version 2, the one that I'm running, is coming out this week. But this does pretty much. This is the basic version of it, which still does all the opening ranges. So this morning, the ORB EA, if you were running this morning, this would have taken exactly the same trade here. Nothing's different. The only difference is you haven't got this money management system set up for prop, and it won't take additionals, version 1. But you could set up to do automatically if you wanted to. What's your comment on UK 100? Don't know. It'll be doing the same as the DAX. It'll be flying, I would imagine. Yeah. We'll have a look at the indices in a second from a longer term perspective as well. Lee, you might take that 705, 710 ADR. That will be fine already. What? Oh, you're talking about the profit? Yeah, so I mean, again, this, if you're talking about this trade here, yeah, I mean, this is set up, this is running a set file, so I'm hands off, I don't want to touch it. But if you do want to touch it, that's absolutely fine. If you see this thing at 700 odd and you think, oh, I'm more than happy, if it's designed to carry on trading and you just want to shut it, let it do its thing, turn it off. You know, the EAs, as you know, if you've been in here for a while, my opinion on EAs is you don't just stick them on your account and let them trade. You have them execute a strategy for you, but you use your head. If a piece of news comes out now that is going to have a negative impact on the indices, I'm not going to let the EA just go down to here and get me out of the trade down there. I'm going to shut it. So if you're happy with the profit, take it manually. But bear in mind, if you've done the back testing, yeah, and the strategy says it will generate, like in this case, $70,000 off of a $12,000 drawdown, it's only going to do that if you let it do its thing and don't interfere. But, you know, when you're trading prop, that might have been enough. You know, 1,000, let's say 1,050 is enough for a pass on a prop account. You're going to manually adjust this so that it doesn't shut you out there. You're going to use your head and tell it to actually get you out at 1050 if that's all you've got left. And this is why all this information, all this data is displayed here for you. Look. Yeah, I've got to do $6,000. If this now flies up and gets to, I don't know, $2,400 in profit, it's pretty exhausted, and I'll probably close it out because it's going to get me back into positive territory. If I'm running this on a live prop account, I'm just going to let it do its thing because it's proven long term to generate consistent results. So I'm just going to let it run. That's the whole idea. This is why I'm running it on 3 different prop accounts, because I just want to let it run and I just want to let it pass and let it do its thing and not interfere with it. Quantum physics in markets too. Observation of quantum phenomena can change the measured results. What? Watch it do something. Don't watch it do something else. Yeah. It's the old pot of boiling water thing, isn't it? If you watch it, it won't boil. And as soon as you go and make a cup of tea, it'll boil. Same as paint. Paint won't dry if you watch it. The laws of quantum mechanics. But yeah, I mean, this is the problem. The reason I like to have EAs execute things for me and why I built the market reverse alerts EA is because if you let an EA do something for you, it will do it as you want it done rather than as you would do it yourself. So if I was taking this trade today, right now, I would be inclined to close it. Actually, it's not that one, it's this one. I would be inclined to close it. Why? Because I've got $1,300 in the bank. That's almost my mortgage. But I know from back testing, this thing could go up to 2.5, 3 today, but my human being in me will want to shut this. So if you let an EA trade it, the EA will do as you've asked it to do. I've asked it to tighten stops when it gets to a certain level, and it will do that for me. It will protect my risk. It will lock more of this in for me automatically. Because that's what I've asked it to do. And that's what I would do in real life. I would be trailing underneath candle lows at the moment. But you know, every bit of my being is saying, take the $1,300. I'm not going to do it. I'm going to let the EA, because I've seen this running in the strategy test. I've seen this banking $4,000, $5,000, $6,000 a day because I let it. Because it, you know, what's to say that it's not going to do that here and then fly off and hit 350% ADR today? I've not got a clue what it's going to do. So why not let's give it the benefit of the doubt? Do prop firms allow running EAs for retail users if you're not the owner of the EA? Different prop firms have different rules, Sagar, on running EAs. The reason I have made this so configurable is so that it would be very difficult for you to have exactly the same settings as anybody else. Therefore, highly unlikely you would get spotted. There's custom comments available in it as well. So you can make it comment whatever you want it to. But at the end of the day, a prop firm cannot stop you trading an opening range breakout. It's a strategy that's been around for decades. Yeah, a lot of people are trading this strategy. I've been trading it for ages. I traded it in stocks 10 years ago, and it worked on NASDAQ, on the QQQs I used to trade back then, and I used to trade NVIDIA back then. I was trading this strategy a decade ago. So they can't stop you trading this. As for automation of it, yeah, if everybody used exactly the same settings in here and 1,000 people bought it, I'd be very happy if 1,000 people bought it. They won't. But if 1,000 people bought it, there'd be a footprint, wouldn't there? So make your own set file up. Yeah. Change that to 420. Change that to 215. You are now trading a different strategy. Add on when you get to 200. You are trading a different strategy. Set your pending offset to 20, not 15. You're trading a different strategy. Yeah. What the prop firms don't like is all these EAs out there that are designed to pass prop challenges. Yeah. You know, these ones you can buy where they go, we'll pass your prop challenge. Somebody messaged me before Christmas about it. They paid $1,000 for an EA to pass a prop evaluation for them. And my answer when they told me it was, do I think it's a good idea, was the question. was like, no, don't be stupid. If you can't pass a prop firm yourself, what the hell are you going to do when you get a 200 grand account? You can't trade. That EA is not going to trade the account for you. It's designed to pass prop. Anyone can stick an EA on there and it can take a gamble. I could have gone long, right? With my risk on this is 250, for example. I could have gone long with 2,500. I'd have passed today. Does that make me a good trader? No. That's what the prop firms don't want. They don't want everybody running the same EA, the same strategy on hundreds and hundreds of thousands of dollars worth of accounts, because their risk profile is going to be heavily embedded in one strategy. And the other thing you'll find with these sorts of EAs is, first of all, you've got to get caught using it. And it's not that likely, because you'll be running different set files to everybody else, and you'll be getting slightly different results to everybody else. But the second thing is, a lot of people will be closing this out manually when they see this huge amount of money coming into their account. So where I close it and you close it are going to be totally different. You're going to have different profit targets, yeah? So where mine closed out at $718 and $379 today, yours will close out at $425. Totally different strategy. You would have actually, there's where I got out, you would have made more money than me. Well done. Some people would have taken opening range breakout 1 with a 50% retracement stop and a 1-to-1 target. They're using the same EA, but they're getting completely different results. That's fine. The prop firms don't mind that. They want diversification. What they don't want is everybody doing exactly the same thing, because that just makes their investors worried. So yeah, I've made it purposefully as customizable as you can get, which annoys people because they're like, oh, I don't understand the settings. Well, you shouldn't be using it then. Sorry, my opinion is, if you don't understand what this is doing, don't use it. You need to know what you're doing with an EA when you put it on your account, because it's trading real money. So, so the the reason behind this, close everything when you get to there. If you change these figures, you'll get a totally different result to me. If you change that or that or that or that or that or anything you set in here and you change, you're going to get totally different results to me. Look at this backtest. Yeah, so this is using the EA. Can you see it all? Yeah. This ran 1,500 times. You probably can't see it; it's quite small. But this ran 1,500 different versions of the settings on the DAX, and 1,462 of those 1,500, so 38 of them, didn't make a profit. 1,400 of them made a profit. So there's 1,400 different settings here that we could all use and get completely different results. That's diversification. Prop firms don't care about that. If I'm running this set file and you're running that set file, you're going to make 40 grand and I'm going to make 70 grand. Oh, well, you only made 40 grand on one instrument. Yeah, so this is why I've made it as configurable as possible, because everybody's going to want to set this up slightly differently. But at the end of the day, what you use, which settings you use, won't make a massive difference. They will all eventually come. The edge is there. The edge is that. The fact that the market goes mental at the open. We know that. That's the edge. This is why people are saying to me, does it work on gold? No, because gold hasn't got an open, is it? Stock indexes have an open. The bell rings in New York at 9:30 a.m. every day. So you know when the market's going to move, because the bell's ringing and everybody's going, okay, here's my $25 billion I need to put in the market today. Bang. Why does it do that? Because everybody does it at the same time. Here, no one's doing it. Gold will sit there and go like that. And at some point, one of the big institutions will go bang. You've got no way of timing that. With stock market, you have. That's the edge. Which settings you use on the edge will make the difference between 30, 40, 50, 60, 70 or 80,000 pounds profit. Do you really care which one you get? No. You want to become profitable, you're profitable, aren't you? That's it. You've achieved your goal. So that's why I've made it configurable. If you get caught with it and they say no, not a lot you can do, is there? Build your own. I'll build you one. But it'll do the same thing, won't it? You see what I mean? It's like if you look at any instrument, so look at the pound US dollar, right? What is every smart money trader in the world doing, right? The smart money concept, as they're so-called smart money. It's the smart money concept, or Wyckoff, or whatever you want, whatever you want to call it. Supply, demand, support, resistance, liquidity runs. At the end of the day, this area here is where this thing bounced multiple times. What do you think the entire market did there? They bought it. They all get slaughtered. Yeah. Do you think the prop firms are looking at that and going, oh no, they must all be running the same strategy? Of course they're running the same strategy. There's only two things you can do at that level. You can either buy it or sell it. You're either a breakout trader or you're a mean reversion trader. If you're using an EA to execute the trade there, or you're putting a pending order in manually, or you're hitting the buy button as it gets to that price, doesn't matter, does it? They can't turn around and go, oh no, you can't trade liquidity runs or supply and demand or support and resistance strategies because we've got somebody else doing it. The fact of the matter is, there's 10 people going to hit the buy button here. One of them's got to stop there. Three of them are there. I don't know. The TP for one guy was there. The TP for another guy was there. The TP for another guy is up there because he wants to hold it for 3 weeks. They may all be hitting the button at the same time, trading the same idea. If they all use an EA that executes at price point, they're all going to get in roughly around the same area, aren't they? Is it allowed or not? Build yourself an EA to do it or buy someone else's to do it. As long as there's no footprint, it doesn't matter. I've been trading EAs on prop for a year. No, I've never had a problem. Never even been asked. But, I don't know, it might change. Do prop firms allow EAs? Right, yeah. Opening range breakout and the market reversal alerts EA. I've been using that for years on prop. Not for years, for all year on prop, just to get me into positions. Pound US dollar looks like it's reversing at the moment. Trying to anyway. So it's the EA that moves the stop loss to protect the profits. Yeah. You're right. The EA is so much customizable. We need to create unique sets with just small configuration changes. Yeah. That's the idea behind it. Just want to see if I'm getting close to getting in. I've missed the entry short on Aussie New Zealand, unfortunately, there, but I'll if it gets another one. New Zealand CAD, I'm long one. So basically, I'm in long. I've got a 2 ADR stop. Jesus, where's the ADR stop on that? Where's my stop? Hold on. I think I may. Got that up. Yes, let me just stick a 2 ADR stop on that. What is ADR? 85. So that's 160. I'll do it on there, it's easier. 160. First trade taken on it. Need to change that set file. Wait a minute, one sec. Oh, they did have use fake stop loss. Oh, was that set to true then? Loss. Anyway, yeah. So I'm long New Zealand CAD. So I'm curious, for $1,500 for a mortgage, how many bedrooms you got? It's not $1,500, and it's certainly not £1,500 either. It's £2.5 grand and 4. Just to answer your question. Right. So we're still going on this opening range break. I'll leave that running. Right. So that's pretty much all I've got for this morning. As I say, today I just really want to watch today and see what happens. I'm going to get into a few positions, like I just said. I'm long New Zealand CAD, and I'm going to get long. I'm going to get in on Aussie New Zealand short and pound New Zealand short as well. So those are the 3 positions I'm kind of looking for at the moment. A little bit of an overexposure on the New Zealand dollar if I get into all 3 of those, but I don't mind too much because the fundamentals are all on side, obviously, on those at the moment anyway. So I'm not going to run through every single pair. I did want to cover, though, oil. We were looking at this before Christmas, and I'm just going to cover the indices. So oil, basically, we've got OPEC all day today. We were looking from down here before Christmas, if you remember, at this being the bounce and new market structure to form. It looks like it's happening. This was the target. And then we were looking at targeting $90 a barrel. So coming back up basically into this area up here. So at the moment, it seems to be going that way. Russia tried to put a spanner in the works, basically. Didn't manage it by putting the by saying about the cap $60 a barrel and stuff they weren't going to honour, and etc. etc. Sorry, Europe tried to put a spanner in the works, not Russia. That failed, and we seem to be still pushing up. So depending on what happens today with OPEC meetings, unless they come out and do anything stupid, I suspect we want to be looking for longs on oil still. Obviously, this is now the peak formation low. We've got this area here as an initial sticking point up here, this area here. So we've got a good couple of ADR from where we are at the moment. We're just rejecting these highs. So I'd be looking for any reasons to get in long, basically, on oil. So dropping down onto lower time frames and looking for reversal alerts. On M5, you had one this morning in Asia. Nice 3-bar reversal there. And obviously, last Thursday was the last reversal alert on oil on M15. So at the moment, we're getting stuck up here. So we've got potentially, because it's FOMC week, we've got potential to just pop around in here unless they say anything on OPEC. But I'd be looking to basically buy this up, oil, until we get up to sort of the $90 a barrel. And at that point, which means obviously breaking out above here, at that point, we can sort of see where we go from there. Indices, no idea on direction. Obviously long at the minute, but no idea on direction with indices as yet. So the question we've got to ask ourselves right now is, we're in 2023 now. This was where the bear market started. Christmas last year. Yeah, that's Christmas. And since then, we didn't look back, did we? What does 2023 hold? So we've got a triple bottom formed at the moment on the NASDAQ here. Are we at the end of this bear market, and are we starting a new bull market? If you look back in time, bear markets, this is the longest bear market, as you can see, we've had for a long time. Whether or not it's over, very difficult to say. I can't see that this is the end of the bear market. We are in a recession. Some countries are just starting their recessions. So as long as we got these interest rates going up and continuing to go up, and the Fed, the Bank of England, everybody has basically said we are still going up. Yeah, everything's positive. Yeah, we've not got any negatives. Nobody's touching inflation. Nobody, apart from New Zealand, has said, Japan, but they never change, so ignore them. But nobody apart from New Zealand has actually slowed down at all at the moment. So as long as these inflation figures continue to rise and we get positive change on inflation, we are going to get positive interest rates. Even if inflation starts to come down, I don't think we've seen the end of interest rates. So that is all going to drive economic recession, which means typically in a recession, the stock market tends to fail. The level before COVID is the level that everybody has been talking about. When we first started this bear market and everybody realized that we did a pullback and made a new low and they're like, holy crap, we're in a bear market, that's the level that was called, and it still is being called, and we haven't achieved it yet. So when we look at the stock market, we tend to use the Nasdaq and the S&P as the main drivers because they're the largest markets and they haven't achieved that pre-COVID level yet. So another 2 or 3 months of a bear market, and then when we get down to here, we need to see where we are economically. Everybody's talking about the next quarter being interest rate and inflation rises, or interest rate rises and inflation stagnation. So inflation stopping, which means that interest rates will start to slow. When that starts to happen, we will see bullishness entering back into the market. And everybody's talking about that being in the first quarter. So for the first quarter this year, we should see the Fed, Euro, pound, everybody putting interest rates up further. So for me personally, I still think as long as we've got a bullish US dollar, we are going to have stock market decline. How long that's going to last is going to be difficult to tell. We'll look at this video next Christmas. New Zealand dollar CAD's in profit. Woohoo! Need to change that. Don't even want that. So yeah, we look at this video in a year's time when we're down here somewhere and the world's blown up. We've got no electricity. We'll see what happens. But for me, I'm remaining bearish until we get down to this pre-COVID level. When we got back here, we struggled. We slammed through it, and then we had this indecision, and then we're like, yeah, we're okay. When we get there, I think that's when we need to really start thinking about potentially a bull market coming back in. I don't think it's going to be a flyer like that. I think we're going to get something similar to this, which is equivalent to somewhere between 1 to 3 months of range-bound activity, which is basically market stabilizing before it pumps again. So the minute I'm bearish, FOMC this week, if the Fed comes out and basically is very, very bearish and says, actually, no, interest rates, I don't think we're going to put them up anymore, and inflation's coming down, unemployment stabilized and is starting to drop, the US dollar will start to decline, which will drive the stock market. So this is really what we need to be focusing on, and hence, obviously, the whole reason for building this system out myself. This is the key driver at the minute, and it will be all year. It's what drove the market last year, and it's what we need to be paying attention to this year. So it's all about that, and that driving that. Interest rates are what drives the market. If you have high interest rates, you are an attractive currency. Anybody that's got a $10 billion account wants to have it where it's going to attract the most interest. Canadian dollar at the moment, New Zealand dollar, US dollar. They're the most attractive places for you to put your money right now if you're a billionaire. Yeah. So they're going to continue to buy these things up. All of a sudden, the Australian dollar, they decide to go up to 4.75%. Bang, the Aussie's going to fly. Yeah. And this is why the differentials are here. Yeah. The differentials between interest rates are what drives currencies up and down, and how much they change and how much inflation is changing. So all these differentials are what creates that whole scorecarding system, which gives us our bias. So that's the way that I see it at the moment. I see the US dollar, obviously, when these all start to go range and neutral, that's when we want to be thinking stock market long, potentially. But until then, I can't see any reason why we shouldn't be looking for, if you're going to position trade it, looking for shorts on the indices. Not that you'd think it this morning, would you? But, you know, what's happening here, who knows? We just have to wait and see. Took a GU long, now as 150 ADR. Cool. I'd be more inclined, to, like I said, to get in up here short. But, you know, this is what this is for, yeah? If you are long on pound US dollar at the moment, where are we, pound US dollar? There is no retail. I was going to say you're one of the retail crowd, but you're not. Retail is has no bias at all on pound US dollar at the moment. 41% short, 59% long. So you're one of them. You are actually in that statistic right now. So your question is, you took a long on GU at 150 ADR and liquidity grab, but on the buyer scorecard, it's still a sell. Won't it contradict? Or shall we wait for buyers to become buy? Well, that's your decision, isn't it? Like I said earlier, personally, what I would be doing on pound US dollar, which is why I drew this line in, is I would be waiting for price to get back up to here to short it. But that doesn't mean an ADR reversal isn't going to work. Don't forget, right? Whatever indicator you're using, ADR reversals are fantastic. They work beautifully a lot of the time. They don't a lot of the time. RSI extensions work a lot of the time. They don't a lot of the time. If you're going long here, it might work. It might not. What is important is how, now that you are long on there, how you manage that trade. If you got in long here and it's here and you're worried about being wrong on it, protect it. If you're super confident, leave your stop down there. If it takes you out and then pushes back up again, you could take a second bite of the cherry and get that move there. And then when it gets up to there, exit your position and go short, because sentiment says you should be short on it. But sentiment isn't always right. Yeah. Just because 94% of the retail crowd are short on New Zealand dollar CAD does not mean New Zealand dollar CAD is going to go up. Yeah. It has nothing to do with that. If you look at New Zealand dollar CAD, it's going long. I'm long on it, obviously, at the moment. But just because the retail crowd are going one direction doesn't mean it's not going to do this and then continue down, because you don't know what the major market participants' books are like and what they need it to do. So if they are happy for retail to be right until they get down to here, then they will drive it down to there and retail will be happy. Retail have got to win sometimes. Don't forget, right? If you look at any broker that publishes their statistics, like Axie, for anybody, yeah, look at their statistics. 82% of retail investors lose money, right? 82% of people are wrong. That means 18% are right. Now, if 18% are right today, are actually the guys that are short on New Zealand dollar CAD, fair play. Retail does win sometimes. We just know that the vast majority of the time it doesn't, which is why the intraday sentiment takes into account COT, which is the large market participants and retail. So if you've got the COT guys short and you've got retail long, they are more likely to win, aren't they? Because who moves the market? The commercials, not retail. These guys have got the power to move the market. These guys you and me, we're on board. We go where we get on the train, they drive the train. We don't get a choice. We can't get off until they tell us to get off. We get off at our stops or we get off at our take profits. You can't jump off the train halfway. We can, but that's everybody who does that loses money because their risk rewards never play out, do they? But it's another story. So just because of a sentiment doesn't mean it's wrong. What it means is your idea might be flawed because we don't know how strong the sentiment is to go short and when. Don't forget, timing is the thing that we don't know, right? What happens with all of this stuff? Forget, all of this stuff here, this buyer scorecard, right? One of the reasons I didn't take up any other company that offers this type of service as a paid service is because there's no real long-term back-testable edge with this. This is a long-term view. This is Aussie New Zealand. The fundamentals point to it going down. Does that mean Aussie New Zealand can't go up for 3 weeks solid? No, of course it can, because the amount of movement that has gone on Aussie New Zealand before Christmas means that it's highly probable all these market participants are going to exit their positions, become buyers and get out. What it means is I don't want to be doing that. I'd rather be doing that. Now, if I do that, sell, because it says to sell, when we pull back to here and they decide to take it to there, fine. I'll get in a couple more times and wait. But as long as these guys are on my side, it's highly likely that that trend on Aussie New Zealand, for example, is going to continue, isn't it? Yeah, so this is exactly where you want to be getting in Aussie New Zealand short. On a pullback. Because the market participants, inflation numbers and everything else is pointing towards Aussie New Zealand coming down. When? I haven't got a clue. Could be here. Could be there. Could be there. Yeah, let's put the levels on. Yeah, this is important to understand. Fundamental analysis is long term, not short term. So the next leg down on Aussie New Zealand, assuming it's going to carry on, could be from this balance right now. Could be from that supply, demand, support, resistance, whatever you want to call it, at 175 ADR. It could also be in 3, 4, 5, 6, 7 days time when it gets back up to there. Yeah. What we don't know is when this next leg down is going to start, if it's going to start. What we do know is that the odds are in our favor, because everything for the Australian dollar is bad and everything for the New Zealand dollar is good. The market is on our side and retail have gone the wrong way. That's all we know. We don't know when the move is going to start, which is why position trading is so good, because it doesn't matter, does it? If we get in here, we'll get in again there and we'll get in again there and we'll wait. But we don't know when. So don't use it. Use it as a guide. Use it like you're moving averages. Yeah. So I've got the 24 and the 72 on my side. I've got the fundamentals on my side. I haven't got RSI and ADR on my side, but if I had those on my side as well, my God, that's a good sell, isn't it? 59% mostly in drawdown, yeah, retails. Morning, sir. Which website is the sentiment score? Links in the description. Marketstructuretrader.com. Right, let's just have a quick look at what we're doing. So the ORB long's still going. $1,500 in profit now. New Zealand dollar CAD, 117 in profit now on that one. That was the ADR, 175. So that was that reversal alert. there. You notice I don't have any TPs. So because this is a prop account, I'm just basically, I've got an 8 grand to target. So I'm just gonna kind of wing it with profit. I don't set targets, as you know, if you've been in here for a while. I'd like to just get out when I think it's right. But if this is going to be a bounce, shouldn't be looking to exit anywhere but sort of up here somewhere, really, which is $700 odd, 10% of target. Right, that's it for this morning. So opening range breakouts will work very nicely. I will be updating the trades topic that I've created and putting trades in there, basically. But it's not a signal service. You'll see me taking trades in here, and I'll be posting in there the trades that I've taken, but they're not going to be timed or anything. So I'm just going to stick them in there and just show what's happened with the opening ranges, the opening range breakouts, and stuff like that. And I'll post in there the trade that I've just taken today on New Zealand dollar CAD, and I'll post in there that the Aussie New Zealand and the pound New Zealand are teed up. So I'm just about to get in short on pound New Zealand in a second, and Aussie New Zealand missed it, unfortunately. So that was the entry there, but I missed it. So I'll have to wait for the Aussie New Zealand to push before I can get in on that short, unfortunately. If it doesn't, I won't get in. Not what I can do about it. Anybody got any other questions? Anybody still here? Yeah, we've got 27. That's right. Anybody got any questions on the fundamentals or anything? There is an explanation on each page as well, by the way, of what it all means. Does the opening range breakout work and is profitable for just trading that? Yes, this all updates automatically, Kenny. Yeah. Does the open range breakout work? Yes. Look. And is it profitable for just trading that? Well, yeah. I don't quite know. I don't quite understand the question. There's loads of, I mean, if you on the there's set files and backtest results here, yeah, on which you can link from here. If you just click on that takes you to MQL5, and I've published loads of results for backtesting the opening range breakout, and literally, I mean, I've got thousands and thousands of combinations of successful. I mean, thousands, like over 100,000 variations of settings on the EA, all profitable. So it doesn't really matter what you use, but there's loads of settings in here, and the set files are all there to download. You can go and test them yourself. But yeah, I mean, if you're looking for something that's going to make money every day, no, there isn't such a thing. But this will make money long term. And the version that I'm using is designed to pass prop. So, and obviously then trade prop on reduced risk, which is what I'm using it for. So it's designed to pass these evaluations. And then when it's passed, I will reduce the risk on each of these down. And just let it do its thing. I've tested the long-term edge on it, and it's fine. The thing I can't control is drawdown, obviously. So whether it will blow an account or not, I can't tell you because I can't see the future. Historically, though, it will. Sometimes it will achieve 12 grand. I mean, this is one set. This is just one test. 1,500. So we had 12 grand drawdown there, 11 grand there, 6 grand there, 12 there, 12, 13, 6, 7, 8. You know, these are all drawdowns. 14 grand drawdown there, that would have blown your account. So, you know, these larger drawdowns, don't use them, or reduce the risk. So these were all taken with a $500 risk. Yeah, so that was risking $500 a trade. It did 14 grand in drawdown, made 51 grand, but it drew down 14. So if that's too much for your account, then reduce that down to $300 in risk, and that will reduce your drawdown, and it will also reduce your profit. But the thing that will stay the same is that, which is your return on investment. Your return on drawdown. That's the most important thing. How much am I going to get back for the drawdown that I'm going to take on the account? Backtested failed 30 to 40 times, 1400 times past. Well, that's just one test as well, don't forget. These are all different tests. Each of these is a different test. So there's 1500 tests there, 150 tests there, 1500 tests there, 2400 there, 600 there, 2160 there, and 2880. So if you add all of these numbers together, that's how many times I've tested it on the DAX with totally unique different settings. Yeah, so this is, you know, this is just one version of settings testing. This one's testing the opening range size. So this test here, the main focus of this test was where should I put my stop as a percentage of the opening range. So that there, 30, is roughly 30%. So the stop would have been there. This one here is 110, which means the stop's placed down here. Yeah. This one was testing only using opening range 1 and ignoring opening range 2 and 3. That's the results we got with that. That's the drawdown for that one. This test was using the same strategy, but with a fixed lot size instead of a monetary risk. This one is testing 5, 10, and 15-minute opening ranges with multiple trades and not multiple trades. So i.e. if all 3 opening range ones are at the same level, take 3 trades there. Or just take 1 trade there. This is testing the profitability and the difference between those settings. All again profitable. So this is what I mean. It doesn't matter what you use. Use whatever you want. They all work. But what happens if it fakes out, right? So if it fakes out, you get stopped out. If it fakes out, you get stopped out. What do you think happens, Kenny? You lose. There's nothing you can do about it. It's like any strategy. What happens when the smart money traders short a liquidity run that becomes a breakout? They lose. I'm not being funny, but it's an obvious answer. The breakouts that fail become mean reversion trades. So everybody that's trading the Bollinger Band breakout there wins. Everybody that's trading the trend breakout there loses. There's only 3 types of strategy: trend, mean reversion, and breakout. All of them work. The trend traders like me on this particular strategy are milking it. The breakout traders like me are milking it. The mean reversion traders are dead. Dead. They've lost twice this morning, the mean reversion traders. But go back to last Wednesday, the mean reversion traders made 5 grand. This morning they lost 2. Never mind. Swings and roundabouts. That's trading. You lose, you win. Just make sure your winners are bigger than your losers. But with the new version, if you get that happen, the new version will take a second entry there. Currently, version 1 will only trade once. Yeah. So this is why I prefer. This is why I built the version 2, because for me, it's much better because you're going to get failed breakouts all the time. What is a failed breakout? A double top. Double tops work, don't they? We know they work. Everybody trades double tops. I just traded a double bottom. Look, New Zealand dollar CAD. What did I just trade? New Zealand dollar CAD. I just traded a double bottom. Yeah. Everybody that had their pending shorts there has stopped out. They lost, I won. Well, I am winning at the moment. I don't know if I'm going to win or not, but I mean, you know, it's. But all the breakout traders who maybe got stopped out on that will probably have another pending sitting there, having another go. When that does break, if it does break, they'll win and I'll lose. You can't control anything in this market. You're not in control. You're just literally on the train being driven along. Robbie, bit confused. So you hold your losses on an open range? No. The opening range breakout. That's my stop loss there. So I've got entries here. Yeah, my stop is here. See that sell stop here? Yeah, the stop loss for that sell stop is there. So if I'd have taken a range break short and it had gone like that, I'd get stopped out. I have to stop. I don't hold on to the losses at all in this strategy. You can't hold the losses in this strategy. If you're wrong, you're wrong. You get out and you go the other way. The whole premise, and I will cover this in the video. Yeah, when I do the live stream to cover the EA, I will cover the strategy in full. But the edge of this strategy is you have no idea at the open of the stock market which direction it's going to go. Where it went yesterday, where it's gone this week, has got absolutely nothing to do with where it's going to go in the first 15 minutes of that market open, because the direction it takes is completely dependent on the orders that need to be executed by the institutions on that day. If I, as Mr. Multi-Billionaire Lee, have said to my broker, my bank, I want to buy $200 million worth of Microsoft today, please. Do you think the NASDAQ is going to go up or down? As a retail trader, after that initial 5-minute candle goes in, do I know whether Mr. Billionaire Lee has got that order ready to be executed or not? No. So you let the market take you where the market's going to take you. If it breaks to the upside, you go with the momentum and the volume. If it breaks to the downside, you go with that momentum and the volume. If it pushes up and comes down and then goes up again, you get back in. If it breaks to the downside and then comes back in, you're going to get stopped out twice. If it does that and then comes down to there, you're going to get stopped out 3 times. But when it goes, you are going to be on board. But you've no idea which way it's going. So the whole premise of the opening range breakout strategy is based on you not knowing anything, which is what we do every time we take a trade. My New Zealand dollar CAD trade I've just taken this morning, is it going to work or not? I haven't got a clue. I don't know if it's going to do that or it's going to do that. I have no idea. But with the opening range breakout, by the time that 15-minute initial order execution is done and those initial opening balances, as they're called, or opening cash balances are in, the sentimental traders take over, and that's where the direction of the market tends to go. So you're only ever going to get one of 3 types of day, and this is all explained in the strategy as well, but you only ever get 3 types of day. Where are we? DAX. Yeah. You will get a good timing. You will get a trend day, like today. Yeah. You will get a rotation day, like that. Or you'll get an outside bar day, like that. Yeah. That is indecision. That is indecision. That is decision. At the open, we don't know whether we're going to get a rotation day or a trend day. The opening range breakout strategy makes its money on trend days. On rotation days, it's designed to reduce risk and minimize loss. It will lose on a rotation day. Sometimes it won't, actually. It depends how big the rotation is. If you've got a rotation like, let's find a big rotation, that. Yeah, so if you've got a rotation like that, or a rotation like that, there you go, that's a rotation day. Yeah. If you've got a rotation like that, we'll make money there, and we'll make money there. If you get a rotation day which is tight like this, you'll struggle and it will probably make a loss. But that is why we have, on the new version, this in place. If we're going into rotation and we've done that, stop. Not working today. Wait till tomorrow. That makes sense. But that's basically what the ORB is. You know, it's not my strategy. It's a strategy that's been used in stocks for many, many years. It just, you know, this is a stock index. This is the stock market. So that's why it's designed to work in the stock market. But you know, you don't know which way it's going. Like today, do you think everybody today had any idea that the pound US dollar was going to do that? If you did, you'd be on it short, wouldn't you? Did you know? No. Otherwise, you'd be on it. But if you'd have taken an ORB on that, if you'd have taken that reversal in Asia, we don't know though, do we? You can never tell. You've no idea where it's going from day to day. But that's the premise of the ORB. Yeah, it doesn't work. Most of the time, it doesn't work in FX. I've tested it in FX. It's very, because there's no open. When this happens in the FX market, it can be any time from here to here. You can't pick a time of day for an opening range break on the stock market, on the FX market, but you can on stocks, and that's the edge. Does that make sense, Robbie? But I will explain it. I'm going to do a live stream and fully explain the strategy and the reasoning behind it, which is pretty much what I just explained there, but I'll do it obviously again in a little bit more detail. But, you know, you will be wrong many days. You'll be wrong. You'll have a week where you'll make no money, and then you'll have a week where you'll make 15 grand. You know, you can't control it. The whole edge is you don't know. This is why I'm still on this. I don't know whether this is going to do that next or whether it's going to do that. But if it's going to do that, I'm not getting out. I'm staying where I am, going long, because I'm only $600 or $400, $550 away from hitting my daily target. Now, if I can do that for 4 days on the trot, I've passed my evaluation. In fact, I haven't. My target is 54. If I can do that 2 days on the trot, I've passed my evaluation, haven't I? But I don't know which days it's going to be. And this is why prop is so hard and why people can't keep prop accounts. Anyone can pass a prop evaluation. I think I passed 3 in December. Anyone can pass an evaluation. Holding the account is the hard bit, because you've no idea when the winning runs and the losing runs are coming. Today, I had no idea if that was going to work or not. It didn't work last week. That's why I've got a £2 loss. I was stupidly let it take trades last week, testing it, and I stupidly got the settings wrong, and I stupidly lost twice as much as I wanted to, but that's because I'm stupid. But if those trades had worked last week, I'd be sitting in about £6 of profit. Yeah? But I had no idea. You have no idea which way they're going to go. So each of these opening ranges here, yeah, there's one there. So that's the 10 o'clock opening range. Yeah, so each of these is an opening range. God, look at that pre-market move. Did you see that on yesterday? No, was it yesterday? Yeah, it was yesterday, wasn't it? Look at that pre-market move. And these are days, you know, these types of days, you're never going to be able to make anything work, really. You know, if you get a pre-market move like that before we even get to the open, but, you know, there's the opening range there. There's your opening range breakout yesterday. There's your opening range there. Stopped out, re-entered. Stopped out, break even, re-entered. Yeah. Tick, tick. Depending on what settings you used, of course. There's your opening range there. Can't actually see the candle. Yeah, so there's your opening range there. Long, stopped out. Short, stopped out. Long. Thank you very much. So 2 stop outs, 1 profitable trade. Yeah. That's what I mean. You have no idea which way that's going or when it's going to go, but you know it's going to go because it does every day of the week. There is never a day where we have the market go like that. We have days where we have the market go like that, which is that sort of price action. Horrible rotation, death, can't win. The only time you'll ever win in that is if you're a mean reversion trader. By the time you've identified you're in a mean reversion, you've missed 70% of those trades. Too hard. That's the way to trade it. Now look at that. Beautiful. There's your opening range. There's your break. But if someone wants a quick scalp, then buy above the high or sell below the low. Is that good for a few points, like less than 10? Yeah, you could do, I guess. Yeah. I mean, I know there's people out there that scalp 10, 20 points out the market, but that is very hard work. What would you do? This one here, for example, look. Right, so there's your opening range there. That's your 5 minute. That is your 10 minute. And your 15 minute is the same. So you got the 5 minute candle there, 10 minute candle there, and the 15 minute candle is an inside bar of those two. So you've only got 2 levels to play with there. You've got the 5 minute and the 10 minute opening range. Right. So if you'd have played the 5 minute opening range long scalp, you would have made 13 points. If you'd have played the short on the 5 minute opening range, you had a maximum of 9 points. But isn't that hard work when it goes like that? Yeah, and you get a maximum of 3 to 5 points, and then you get stopped out for, what's your stop? 10, 20, 40? No idea. But your risk reward on that type of fast scalping is very, very, very hard to get positive. You need to be right 70 to 80% of the time. And yeah, you can be in and out in 5 minutes and be done for the day, which is fantastic. But I've been in and out and done for the day today, haven't I? But is it not easier to wait for the market to settle and pick its direction and get all of this? How annoyed would you be, right, if it broke out here, you scalped 12 points and went, fantastic. You know, if you're going like, I don't know, £100, $100 a point or something, you made 1,000 on that, right? And then it came back down and it went down there and you're like, fantastic. I would have got stopped out. So I did the right thing by banking my profit there. What happens after that? How annoyed are you by the New York session, having missed all of that? This is what the people don't understand, is the psychology of missing that is worse than getting that 12 points. You're better off getting that because your pleasure receptors up here, my pleasure receptors right now today are very, very high. If I'd have taken that and closed it there, I'll tell you what I would have done. Taken that and gone long. As soon as I saw that candle go in and that inside bar, I'd have got out on that down candle and I've taken that profit and celebrated having missed all of that. Some days that's the right thing to do because it could have come back down here and done that. But you don't know which day is right to do that or leave it. The EA backtesting has told me that it's better just to let the thing go and put a trading stop on it. Break-even stops as well. Break-even stops have been removed from the second version because break-even stops had a negative impact on profit, had no difference on drawdown. So the drawdown was the same with the break-even stop, but the profit was lower So removing break-evens from the system and using trailers only maximize returns and reduce the drawdown. So, but this is why I do all this back testing. Yeah, because I know, because I've done all this back testing, that I'm better off not closing this position out because I've seen the days that grab 4K. And you just want to be on board rather than taking 10 points. But I don't know, it's different strategy. You can program this to do that if you want. If you want to get this just to take 10 points, stick 100 in there, and it will close it out at 10 points. TP, you've got TP multipliers for each level of break. You can just say, well, that would be 100. So, sorry. Yeah, if you used a 100-point stop, which is 10 points, 100 pip stop, 10 points, and you used a 100% multiplier, that would enter an entry there with a 10-point stop and a 10-point TP. That's not obviously drawn accurate to scale, but you get the point. If you set this to 150, you would get a 1.5 to 1 risk reward. Do what you like, test it. Test it. Stick this in the back, stick it in the strategy tester, test it. Probably works. I don't know. I've never tested it. There's too many things. There's tens of thousands of combinations of stuff you can do with it. I don't know. I haven't tested it all. I'm not going to test it all because it takes too long. I'm happy with the set files I've got, and they work. So, but the second entry for me was the game changer, and it's something I wanted to introduce on the first version because obviously I've seen, you see yourself stop out and then you see it go and you're like, oh God, if only I'd have got back in. Now it does. And that's the thing, because you will get false breakouts. You'll get it do that, and then you'll get it do that, right? How many times have you seen it do that, right? So this is what happens a lot. Frankfurt Open, we get a move like that, right? And then 2:30 or 9:30 in the morning, New York opens and the thing goes nuts, flies. So it doesn't move during Frankfurt. It moves during New York. You missed it. Because New York whipsaws, stops you out and then flies. That re-entry is just amazing when that happens, when you get those conditions. And it really, really makes a difference to the profitability long term. And the stability. It's the main thing it affected. Entering, I haven't got the other range break EA version 1. It's this set files here. Wait for my spreadsheet to open. There we go. So these set files, you look at the drawdowns on these. So we got 20 grand roughly return off of a 6 to 9% drawdown. This is version 1 of the EA. You're getting 30 grand drawdown instead of 20 grand drawdown off of 5 to 6%. Sorry, 30 grand return off of 5 to 6% drawdown instead of 25 off of 6 to 9. And that is because of that re-entry. And not using break-even stops, which this was using. So it makes a massive difference. I say not massive difference, it makes a difference, but it makes more of a difference to your overall daily. You lose less on a daily basis and you win more on a daily basis. That's all it does. It still doesn't, it's not the holy grail by any means, obviously. If only. So if we figure out the daily bias correct, opening range EA can, forget daily bias on the opening range breakout. It's nothing to do with it. Forget it. Well, look at why would you have gone long? Look at the daily. This is the daily chart. Went long there. If you'd have gone long there, it was a down day, right? It was a down day. You got a rotation day, followed by a rotation day, followed by a down day, followed by an up day, followed by a down day, followed by an up day. What happened yesterday has got absolutely nothing to do with which way this thing's going at the open. Doesn't make any difference. Forget day. If you're trading M5, you are trading intraday chop. on any instrument. It's algorithmic. So what the long-term trend is irrelevant on the indices, really, especially when we're in a volatile bear market like we are. If we're in a bull market on the S&P, yeah, it's different thing. But different thing, yeah. For the market reversal alerts EA, though, yes, you want to use directional bias if you're position trading. That's what the fundamentals are for. They are for position trading. Robbie, got it. Happy to see you pass both funded accounts on your website. Yeah, I've passed many funded accounts. Many. I've got E8 funding as well. I've got Take Profit Trader funding as well. I've got, we've had FTMO funding, haven't got that anymore. But yeah, I'm funded with E8 as well. Lots of, I've got loads of these certificates. In fact, I haven't got loads of them because they only give you one. It doesn't matter how many you pass, they only give you one certificate. But I've got lots of different accounts at different levels, basically. Funded accounts. Someone said at your work they had made a profit of 125 grand in a month. I didn't believe it, so I asked him to prove the bank transactions, and he did, and said he just flips them, and that's all. Yeah, okay, so yeah, so prop flipping, as he's calling it, is a strategy that I use or have used, which is why I'm trying to now move over to the opening range breakout strategy only on prop. But prop flipping basically is gambling, the same as anything else. So you walk into a casino, you've got red and black, and you basically put your money on red 3 times. If it comes in, you walk away. Same with a prop firm. For example, E8, you can pass on E8, sorry, not one day. You can pass on E8 in 1 day, and I've done it. I did it before Christmas in the Telegram group. I passed stage 1 in the morning, trading the DAX, and then I passed stage 2 in the afternoon, trading the NASDAQ. By the end of the New York session, I had a funded account. Yeah, because E8 don't have a minimum time period. They have a target. When you hit that target, you're on to the next stage, or you're onto your funded. So with E8, what you can do is basically, you could run the opening range breakout here with a 100% stop, right? And you risk 100% of your account. So you go long with a risk of, what's the maximum drawdown? $1,250. So $2,500, right? So that's your risk. So if you hit that, you stop because you've hit your maximum day. If you get the breakout, you get out at 4,000, wherever that may be. You've passed. Yeah. So now what you do is you sit there. Well, with my Forex funds, you've got to trade a minimum of 5 days. So with my Forex funds, I'll be sitting here now every day taking a 0.01 long or short at the open or whenever, just to get a trade in, and then I move on to stage 2. I do the same on stage 2. So what I've got to do, if you think about it, is I have 2 good trades. Yeah, that's all I need. 2 good trades that work, and I've passed. Now I've got my funded account. I do the same. I trade it up to $4,000, right? And I keep doing that until I've got it up to a point where I withdraw the money. And that's it. And then I start again. But the next time I do that, I'll get stopped out. And then I'll try it again the next day and I'll get stopped out and I blow the account. And then I go back to stage 1 evaluation. But what I've banked is whatever. So if you can get a 200K account, for example, which is going to cost you $900, say, to get that account. If you can withdraw 10K out of that, which is only 5%, it's not very difficult to get 5% gain on an account, is it? Especially if you're over leveraging. If you can draw 10K out, that's a 10 to 1 risk reward. And you just flip those and you keep doing it. So if you take 10 evaluations and spend $9,000 and you can draw 100K out of those 10 evaluations, you're done for the year, isn't it? There's a lot of people do that. In E8, in the back end of E8, if you go and get funded with E8, in the back end of E8, they have a leaderboard. And on that leaderboard, it shows you how fast people are passing. And there's people passing like in 1 minute, 23 seconds. Fastest evaluation today, 1 minute, 23 seconds. Fastest phase 1 and phase 2 evaluation, 3 minutes, 45 seconds. Highest payout today, $84,000. Do you think that guy is a good trader? No. He hit the long button with 10 lots as it did that, and he closed it out there for 70 grand or whatever. Luck, pure luck. Walking into a casino, red or black, with $10 million and you're walking out with 20. Well done. Are you a good gambler? No, you're bloody lucky. Yeah, people that flip prop will fail a lot, but they'll get that one lucky one. It's the same as betting on the horses. You get a 10 horse race, you've got a 10 to 1 chance of winning. If you back the horse that is coming in at 50 to 1, happy days. How many races are you going to need to bet on at 50 to 1 to get that winner? Probably going to have to go to 3, 4, 5, 10 meetings, sit through 10 races a day to land that one. And as long as you can spend 50 grand on your horse racing to get that 50 to 1 winner that you've put $1,000 on, just made a 10 to 1 return. It's gambling. But the prop are happy to do that because of that statistic I showed you on Axie. Yeah, the reason prop exists is because of that statistic. They know that 82.4% of everybody that does an evaluation is going to lose. So if you know that 82% of your evaluations, let's say, for example, somebody's, as a whole with my Forex funds, we spend $1 million in a month on evaluations. They know that they're going to keep 82,000 of that because these guys all fail. This is just a percentage of people, right? If they all do 10 evaluations each, just do the maths. It's a lot of money. Prop firms make their money and they pay their traders out of the evaluation fees. Most of them. And then when you're proven with a prop and you've been with them for a few months, then they'll start taking your trades. But they don't mind paying out on the lucky ones, the same as a casino. Yeah, you walk into a casino in red or black and walk out with 500 grand, they have to pay you. What they didn't tell you is they took 1.5 million off the poor mugs that didn't bet on black that day. It's all a numbers game. And that's what prop is. Yeah. This trade that I'm just about to bank $1,200 on, all the mean reverters that got stopped out there have all paid for that gain. It's just numbers at the end of the day, isn't it? It's all the same stuff. Different ways of looking at it. Right, let's look at my New Zealand CAD. Sitting there at the minute. Have you made over $1 million? No, God no. No, nowhere near. No, I don't have enough. Enough. I did a calculation which I put in the Telegram group in September. I think it was September. I drew. I think it was 29. I drew in September, and I spent 14. I think I'm trying to think. I don't know. Put it this way. I do more than 10 evaluations a month. That gives you an idea of my failure rate. But it doesn't matter. I've got 3 evaluations running live here right now. Yeah. In here. This is just one VPS I've got as well. But this VPS is running 3 evaluations at the moment. And I'm pretty sure one of these is probably going to fail. I might fail all three. I don't know. I've no idea. Like I say, I can't control what the market's going to do from day to day. I have no influence on that whatsoever. If this thing wants to go choppy for 4 days on the trot, I'm going to blow every single one of these accounts. There's nothing I can do about it. If this thing wants to trend every day for the next 3 to 4 days, I'm going to pass all three of these evaluations, and I will have another 200K under my belt. But I will fail evaluations. I will fail funded accounts regularly as well. The key is, and I've said this in here many times before, look at it as a business. If I spend 10K a month on evaluations and I get 8 funded accounts, I don't know, I'm just making up maths at the minute, it doesn't matter. If I get 8 funded accounts, right? And of those 8 funded accounts, 2 of them I get up to withdrawal and 6 of them I blow. If I've spent 10K and my withdrawals are 20K, I have made 10K, 8K, because I get an 80-20 split. Yeah. So I've got 8 funded accounts. To get those 8 funded accounts, I've had to do 15 evaluations. Of those 8 funded accounts, I've blown 6. 2 of them have worked, which have made me 20K. That's how you use prop. It's a business like anything else. The expense is the evaluation, and the expense is the failed evaluations, and the expense is the blown accounts. The profit is that. And if you run multiple strategies on multiple accounts, as I'm doing here, I've got 3 different accounts running 3 different strategies. One of these will pass. I don't know when, but I know they will. No, I don't use the EA for evaluations. No, I trade with the EA as well. But my this is all a bit different, Wayne, because this is my New Year's resolution. You're seeing unfolding. So my New Year's resolution this year is to automate as much prop as I can. I'm a manual trader, scalper. I use a Price Action Toolkit, which is another one of my indicators to trade. So the Price Action Toolkit is basically buttons, basically, and I manually trade price action using this. That's what I did before. But this is obviously an EA as well. This is all, this can be fully automated as well. This trades price action, basically. Trades inside bars, hammers, shooting stars, equal lows and highs, bullish engulfings, inside inventory retracement bars, strong close candles. So this will trade, auto trade if you want it to. But if you want to manually trade, this will do that too. But the problem with manual trading, scalping in particular, which is what 99% of people do on prop, the problem with scalping is it's very hard mentally and you will blow your accounts. Because if you have a bad day, you will want to get out. You want to get your money back, rather. And if you try and get your money back by over leveraging, you'll blow the account, which means you then need to take another evaluation. And that's the idea behind what I'm doing with the ORB EA, is fully automating the whole thing so I don't touch it. Can good traders keep prop accounts for long? No. Let me find you the statistics. This will shock you if you don't know. Oh Christ, where is it? I'm just trying to find the statistics. There we go. Right, so this is the stats. Number of traders who reached 8 or more payouts but lost their account in February, 6. Number of new live accounts, 7,018. Okay, so that's not evaluations, that's new funded accounts. How many evaluations do you think it took to get 7,000 accounts? That's how many traders made it to 6 payouts, right? 6 payouts is 3 months. Okay, 6, and that's just 1 month. So multiply that by 3. We've got 21,000 funded accounts. 6 of them made it through to 3 months. Why? Because everybody's either flipping them or they can't sustain a consistent profit. Why? Because you can't control the market. And this is the problem with prop. Every strategy has a failure rate. Yeah, if you have a strategy that has a 70% strike rate, right, it will have a losing run of 10 trades. If you have a losing run of 10 trades at 1% risk, you've blown your account. When are you going to get that losing run of 10 trades? If you've got a strike rate of 70%, you have no idea. And do you know when it normally is? Phase 1, 10 days. Phase 2, 10 days. I'm funded. I've been trading for 20 days. My God, I've had a lucky run for 20 days. Have I got some bad luck coming? Bet your ass you have. So I get funded. Now I've got to replicate these 20 days with the pressure of it being real money without my psychology stopping me. And I've also got to hope that my winning run continues. That's how many manage it out of, let's say, 21. I don't know how many there is, 21K. Yeah. Only 14% of people actually get through to phase 2. You know, it's just 31% of people pass phase 1. 14% of those, of that 31%, get through to there. Of that, the ones that get funded, no one keeps the account for more than a month. And this is what I'm saying. If you spend 10K on evaluations, right, and you can trade one of your accounts up to 15K, take it. You've just made 5K. If you can do that every month, you're a $60,000 a year trader. That's prop. Keeping it, I don't know. This is what I'm trying to do with this account. So this account, I'm position trading this account. And I did it before Christmas as well. I position traded my Forex funds account, and I got to within, I think it was $700 or $1,000 of target, and I blew it. I hit drawdown limit because I can't control when the market's going to draw me down. So this time round, I'm going with a hybrid model where I'm using a 2% risk, which is a $1,000 loss. So I've still got to be very careful. This is a 100K account. So. Can good traders keep profit? Yeah, good traders can, but there's not many of them about. That's the trouble. What about the settings on the EA now you're using? Are they preset? No, there's no presets. There are set files out there for them. So for the opening range breakout EA, there's set files here. And that's these ones here. There's I think 14 set files or something. No, 7 DAX, 6 NASDAQ, and 1 Dow Jones. But as I said, there's 100,000 combinations. So you know, pick your own. Everybody wants to trade it differently. The opening range breakout can be traded in many ways. As soon as that candle triggers that order, right, you could move your stop there if you want. And then as soon as that candle triggers, your stop's going to trail with you and you're going to get stopped out for a small amount of money. If you want to do that with 3% risk, do it. as long as you can backtest it and it's got a profitable edge of 3 to 6 months, do it. There's no right or wrong. That's what the backtest is there for, which is why I'm not going to issue 1,000 set files. It does what it does. There goes $1,200. I could have taken $1,500, but let the EA do it. So that's 1,100 banked on that one, 380 on that, 700 there. So it's $2,000. Yeah. So thinking back, right? These 3 accounts have cost me $950 for these 3 accounts. Yeah. So if I could get one of these passed and have one day like today, I'm in profit. No, that's the maths. Yeah, I've spent $950 on 3 accounts. In fact, it's not that much, I think, because one of these is a 25k. So there's a 50k, which is in pounds. There's a 25k and a 50k in dollars. Yeah, so yeah, about $900 odd or something. So you know, when I pass evaluation, if let's say I get all 3 of these through to funded, if I have one day like today, which happens every week, there's a day like today, at least one. I've just made 2,000, just over 2,100, 2,200. So I'm $1,000 up already. That's the way to do it. If I can let this run so that each of these gets up to 2,000 to 5,000 within a week, I'll stop these 3 accounts, wait for payday, withdraw that money, and then I'll start again. And then when I blow the accounts, I'll just buy another one. That's the way to do it. But hopefully I'll keep them, you know, this EA, and that's why I've been doing so much backtesting on the strategy. You know, this has not drawn down by max limit. This is a 100k account, and this is over 3 months, this testing. It made 10 grand a month, and it never drew down by more than 6 grand. It drew down by 7 there. I've got 12 grand drawdown on the account, don't forget. So this is, I could double this in theory and make 60 in a quarter. And there's a chance it will probably blow it, but there's a good chance it won't blow it, because I don't know whether I'm going to have a good or bad run. Made 3 grand there to make 13. That's not very good, is it? 6 grand to make 23, 5 grand to make 20. But none of these, look, none of these blow the account. I've got 12 grand's worth of drawdown. What's the max on this? 22. So of these 2,400, we got 2,385 passed evaluation, or didn't blow, rather. I got 12 grand worth of drawdown, which is there. So there's 2,189 set files, which would not have blown the account. You know, it's just maths, but you've got to let the thing run. That's the problem. People want to touch it all the time. Just let it run. Set the EA up, stick it on a VPS, shut the VPS, forget about it. Just wait for it to pass. That's the hard bit, watching the thing every day. You need to keep your fingers non-idle, don't you? That's the difficulty. Okay, so those 3 trades from this morning, all at the same level today. This price action EA also has opening range strategy built in. Yes, it does. Why was this not upgraded instead of releasing new Breakout EA? So basically, the opening range Breakout EA, opening range Breakout, the Price Action Toolkit EA was for the buttons. Yeah. So the primary purpose of that EA is Price Action Toolkit. It's that. It's to trade price action. I put the opening ranges in there as an addition, basically. But it's not the purpose of this EA. And to be honest, to develop the opening range strategy within this EA it's too much work. This has already got 36,000 lines of code. running all of this. Not even that. No, it's not that much. 20,000 odd running all of this. The opening range breakout EA, if I wanted to backtest it, would have taken forever with all of this code in there. It would have just been too bloated. So that's why it came out as a separate thing. No one will buy this anymore now, I don't think, which is fine. I mean, this is Price Action Toolkit is designed to draw price action and let you trade it with buttons. That's the primary focus of the Price Action Toolkit. The opening range was just an add-on thing. So, can I purchase the range breakout EA and load it on a prop firm challenge? Yeah, if you want to. Yeah. Would it pass the DD limits with your strategy? Yeah. So I don't know. Answer to that question is I don't know. It's like saying which way is the market going to go today? I don't know. If you set, right, so let's do a little maths here, Wayne. If you have this account, which is a 50K account, which has a 6K max DD, and it has a 2.5K daily DD, if you are risking 2.5K a day, right, and you have 3 days, you know what I'm going to say, where we go into rotation and it loses max loss, you will blow the fund. You'll blow the account because you will have hit the max drawdown. If you have 1 day rotation, 1 day trend, 1 day rotation, 2 days trend, you might be up to, I don't know, 53.1 after 5 or 6 days. You haven't passed yet. Is it going to then do that extra $900? I don't know. Are you going to get a rotation day for 2 days or 3 days and draw back down to 49K? And then it's going to take another 6 days to get you back to target. And it's going to take you 18 days to pass. Or are you going to get a day like today where you pass on day one? Impossible question to answer, because whether you pass a pop evaluation within drawdown limits will depend on what the market does tomorrow. And I can't control that. What you can control is your risk. So when you get an opening range, if you're going to take one trade on the 5-minute opening range and you're going to put your stop under there and you're going to risk $500, you're not going to blow your account because you've got 6K to play with. If you're going to risk $5,000 on that, you're probably going to blow it. Unless it goes like that, in which case you can get out there and pass. I've no idea. The answer to the question is always yes, but is always no. I have passed evaluations with this EA, and it's doing okay. I'm only on day one, really, but it's doing okay today, isn't it? But it's also failed because I've over leveraged on it. And it's not the EA's fault, it's me. I over leverage. I had one account before Christmas when I was developing the initial opening range breakout EA, and it was up to what was it, 50? I don't know, I can't remember. It's just under target, $500 or so under target, right? And I was on day 6. Obviously, I've got a passing 5 days. So it's 5 days minimum with my Forex funds. I was on day 6 and I was $500 short of target. What did I do? I went on and I pressed the buy button with 0.5% risk. And I lost 0.5%. So now I was down and I needed $1,000. So what did I do? I went with a 1% risk on the next trade long and lost it. And I blew the account. I blew the evaluation. It was me. I blew it. Because I don't know whether the market's going up or down either. If I knew that, I'd be a multi-billionaire. And you certainly wouldn't be talking to me now, would you? I'd be like Greg Secker, be sitting on my yacht. Which, yeah, from education. Anyway, is it martingale multiplier or fixed lot? No, it doesn't use martingale now. No martingale. Nope. It's fixed lot or Up to you, whatever you want. There's 3 different versions. You got fixed lot, you've got monetary risk, with a percentage of the opening range as a stop, or you've got monetary risk with a fixed pip stop. So you can either risk a dollar amount, or you can risk 15 lots or whatever you want. It's up to you. That's what I mean. It's up to you, you know. And this is why I'm giving everybody all these settings, right? Because if we both take the 5-minute opening range at the same time on the same prop firm, but you use a fixed risk and I use a percentage risk, and you use an 80% opening range stop loss and I use 110% opening range stop loss, we're totally different. We've got different risk, we've got different lot sizing, we've got different stop positioning. There is no one set file. And I don't want there to be one set file, because I want people to be able to use this themselves in the way that they want to use it. You can do the testing on this. I've done the testing on this. And I know there are a lot of different ways that this makes money. But at the end of the day, it's your choice as to which settings you put in there. And it will be different for everybody. So, and you know, and this is why I've built this. I built this because somebody asked me a question in Telegram and as a direct message, and they asked me basically about intraday trend and what should I use for intraday trend, and I told them nothing, because it doesn't matter what intraday trend is. I said to them, if you took the opening range breakout of a stock market, it doesn't matter what it did yesterday, and they were convinced there was a moving average that would help. So I built this EA to prove a point, and this is where we are now. With something that is a great strategy. But the thing that annoys me is I learned this strategy 10 years ago and I only started using it last year. So I've been sitting on the Holy Grail for 9 years and didn't know about it. If only it was the Holy Grail. Wouldn't that be lovely? Psychology is a massive part of trading. I've failed many challenges, passed both phases, but never had a payout. That is massively, massively common. I think most people pass evaluations and never get a payout, because you've got 2 weeks. The problem is the psychology behind the prop evaluation is to make you fail. So if you have an evaluation where you are given 5 days as a minimum to hit a target like my Forex funds do, right? What do you want to do? Hit that in 5 days. You've actually got 42 days in total to pass it, but they tell you 5 days, right? So you pass it in 5 days. The only way you can pass in 5 days is by over leveraging. I am expecting this EA to pass in somewhere between 14 to 30 days per stage. Right? I could make it pass in 5 days. I'd have to be lucky. It did pass in 5 days before Christmas. It can pass in a day. Anything can, obviously. But the psychology is that, and you do that twice. So by the time you get your account, you are walking on water, aren't you? Because you have made $8,000 in 10 days. So what is your expectation? I'm going to make $8 grand a month. Not real world. That isn't what happens in the real world. What happens in the real world is you now are convinced that it only takes 5 days to make $8 grand or $4 grand. And that is what you will try and do. You will over leverage and you will blow the account. So people that get past it tend to be lucky. And then they expect their luck to continue. But a profit curve look at the profit curves on a normal trading account. Yeah, look at all this. Drawdown. Yeah. If you start your evaluation, there, you fail. If you start your evaluation there, you'll have a rocky week or two, and then you'll pass. If you start phase 2 there, you'll pass. If you get funded there, you won't make any money for 3 or 4 weeks. You'll get frustrated, you'll over leverage, and you'll blow the account. Then you're back to square one. If you just let the EA do it, it'll work, but you won't. And this is why everybody, I think, gets to the funded stage and they don't get the payout, because they expect what's happened in the evaluation stage to continue, and it doesn't work that way. Profit curves do not go like that. Profit curves stagnate. They stagnate, they make money. They stagnate, they make loss. They stagnate, they make money. They do all sorts of things, but they don't go straight up. And when you have a stage 1, stage 2, you've got to get that continuation in the funded account. But what you should do is risk 0.5% to 1% on your evaluation. Yeah, and this is very, 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 very important. Risk that on your evaluation to pass, get through, and then drop that risk down to 0.25%. Because that long-term edge you've got at 0.25%, if you can have 5 accounts doing that, and this is what I'm planning this year, risking that, I'm never going to blow that account. I'm going to need the mother of all bad luck runs to hit 6 grand in loss on a 0.25% risk. But it will still make profit on those big ones because the risk reward is there. The long-term edge, look at the long-term edge. Every single one has a long-term edge, but will have a short-term loss. So you've got to make sure that risk on those short-term losses doesn't blow the account. And that's what those guys do. But I guarantee they ain't doing it manual. Certainly not doing it manual. Otherwise, we'd all be doing it manual, wouldn't we? How long have I been trading for? 14 years. Can all this information be found on your website? Yeah. Well, no, not all this information. No, I mean, the website's there. Go and have a look at the website. There's lots of different ways I trade. My main way of trading is position trading. So this is the position trading bootcamp. Is it's all free. It's 5 days. It's all on YouTube. Multi-time frame analysis, market structure. But this is scalping. This is prop. Prop's a different thing. You know, it's different to position trading. Position trading is a long-term way of making money at the markets. Scalping is high risk, high reward, high probability of blowout. Totally different strategies, which is why I'm running both. So I'm position trading on a 100K account, and I'm scalping opening ranges on smaller accounts. And between the two of them, last year, I make 6 figures. Diversification. Anyway, I've been waffling on for hours. I'm back this afternoon. So we've now got 2 position trading, 2 live rooms a day, 2:20 UK, 9:20 New York. We'll be looking at the market again, seeing if there's any new opportunities, and obviously trading opening ranges again. So I'm probably not going to trade any of these this afternoon. In fact, I will be trading this one because it hasn't hit target yet today. So this one will be trading. The other 2 have hit target, so they won't be trading today. So yeah, basically I'll be back at 2:20 this afternoon. We'll have a look through the fundamentals, see how the fundamentals have changed for intraday sentiment, and just see if there's any setups basically on the ADR or RSI. But at the moment, as I say, I'm not looking to get into much today really, because this thing's going to be all over the place today. Because it's first day back, so the market's going to be a little bit crazy today, but we'll see. But yeah, New Zealand CAD I'm long, and I'll post these in a minute. And I've got those other 2 trades on Aussie New Zealand and Pound New Zealand, which I'm looking to get into as well. And then we'll see how they go. All right. So if you need anything else, I'll be in the Telegram group. There's links in the description to the Telegram group. Come in there. I'm always in there. I'll be back at 2 o'clock. We'll have a look at the opening range at 2 o'clock on the US markets, and see if we can get an opening range break on that one as well. But if you need anything else, let me know in the Telegram group. All right. So anything else, come in Telegram. Otherwise, if you're around this afternoon, I'll be back at 2:20 for the New York Open. All right, so I will see you then. Have a good one.